What's going on? It's just me for now. So people are going to show up a little bit late, so get you started. Get the important stuff out of the way. This is not financial advice. This is for education and entertainment only. There's lots of risks involved. Don't follow trades you see online. Do your own due diligence. Don't follow other people's trades just because you see them on YouTube. You'll get wrecked that way. Make your own good decisions based on your needs, your situation. The trades you see are my needs because they're based on my situation, and my situation is different than yours. There's no way it could be the same. So that's why it's not a good idea to just blindly follow trades you see on YouTube. But we'll get going in a little bit. Maybe in the meantime, until I'm waiting, I'll go through and I will start some technical analysis. What I'll do is I'll go through my dailies, because there's been a lot of red numbers today. And those are usually good for when you can find, like that. You're supposed to buy in the dip, right? Buy low, sell high. So I don't look for green numbers when I'm looking for coins to bid on or buy on, because typically those things are already going to be too late. So I was going through this the other day, but I'll go through a little bit and I'll kind of just talk about it until we have a little bit of a few more people in the group into the Discord. You can join the Discord too. You'll see the stinger at the bottom, tradingstud.io. I haven't figured out if I'm going to call it Trading Stud or Trading Studio. I think Trading Studio is much better, but it's just something about the weird IO domain name. I did that because with Web3 coming around, a lot of domains are IO, especially the Web3 domains. And I do plan on this site being very Web3 friendly. In fact, hopefully these will all be NFT video feeds in the future and stuff. But for now, that's where you go. Sign up on the list. I'll get you I'll get you Discord access if you want to, just because it's, it's that part's kind of new. Eventually that'll be a paid thing, probably a Discord, Patreon related feature. But for now, just join there. I'll let you in. Just as long as you're not an asshole. If you're an asshole, I'll ban you real quick, because I would imagine that a lot of the free accounts will come with some of that. So, that's not what this is about. But anyway, join in. Go up there, sign up. And if you want the Discord access, please let me know. Or let me know in the YouTube comments. I can reach out to you somehow. We'll figure it out, But anyway. So what I'll do today, just to get started until we have a little bit of a couple more people. I was told people will start joining at 10:15 today, so I knew it'd give me at least 15 minutes until I can get to go through some of this stuff. But what I was doing is I have here, and you know what, I'm going to probably need to do this with Femex too, because I just joined Femex, and I would actually, I think I'm going to start converting to Femex. The challenge with that is that I have my my awesome trades, and I'll show you where they're at. They're a little bit down today, but that isn't that big of a deal. That happens. It's just one of those days. It's not like today's one of those days where we're losing money. It's just, the market has days that are up and down, and you got to bear through those, I am a swing trader, not a day trader. So for me to have a day that's a little bit in the red isn't that big of a deal. It's expected. It's a part of the plan. It's part of my trading style. But a lot of day traders get nervous about that because they're in and out in the day, in a day, and they see one day as a major move. On one coin that I'm in, I'm down. Today's a 10% in the red day, and that's significant for the most part. I'll go into there real quick, but you can see that my move here was definitely not on the daily. This is where I bought in right here. You can see that this was where you've got that perfect little setup that I like, the STS, where you come in and do this, and it lands on. Well, this in case was on the blue line. But I knew where I was buying. I was actually buying in this range right here, hoping that this would be the one that it kind of bounced off. It ended up dipping a little bit down, but the rest of it's been wonderful. Again, one 10-day here. Let's see. We'll go into the daily here, but one day where you get a 10%. That's what this looks like right here. It's one candle. It erased yesterday's candle for the most part, but hopefully that's it. We did have some pretty significant resistance up here. This is the channel, my channel. Typically the price stays well within this channel. So it popped above the 1-to-1 here on the the linear scale. And I go down. This is a kind of a dangerous point right here because this is typically like the turnaround for a correction. And corrections mean that it was actually the motive move was down and it's correcting bullishly, and that this way would mean that it was going to actually see a new low. But it's too early to decide whether this is a pure rejection off of this or not. Since there's so much going on here, and also since it's kind of staying above, this level right here, there's a good chance that it can perhaps accumulate a little bit in this zone and then make another move up. There typically is like that. I'd hate to see it go below this right here, which doesn't look like it has. And if it does, it doesn't mean that this isn't a 3. It's on a daily, so you would expect there to be some retests and stuff like this. But once it goes, it should never come back. And it could be that this is the 1-2 as well, 1-2 to that. But we'll see. Okay, so anyway, what I was going to do is I was going to go and I mentioned I'm doing this on KuCoin, but will end up having to do this on Femex because I recently joined in. But I have a list of all of the different coins that that KuCoin has, and I have it based on their leverage amount. And so what I'll do is I open up my my spreadsheet over here. And that's in a different window. You're not going to be able to see that. But I go through the different lists and I'll go through daily. Like for instance, right now I think I'm on TRX. So let's go down to TRX. So these are my different lists that I use. This is like the entire list, and then I will take the ones that have that are somewhere in the that have some kind of an entry approaching, and I'll convert them into the watch list, and that's what these all are. And then once I'm in a trade, or at least getting really, really close to a trade, I'll go into the current trades. Like that ape trade, I haven't been in that yet, but it's still right here. It's waiting for me to enter. It had some upward movement last night, which kind of is a drag because I'm really been hoping and waiting for it to retrace back into this buy zone right here before it be a kind of an epic move. I expect this one might be like this ASTR one that over the last couple of days, I think it was in the 20s at some point. So anyway, there's that. So there's some people in Discord. Who's here? Crispy, is that you?
Hey, buddy, I'm here.
Crispy's here. Good old Crispy. And then I expect in about 5 minutes that the people that I was told that my class is running late today by about 15 minutes. So anyway, what I do is I go through these, the entire list. And let's see, so TRX is the one I'm on now. So let's just use it as an example, TRX. I'll go down to TRX in here. Oops, that's not it. I'm not even in here. Okay, so, I don't even have TRX on here yet. So let's find the best coin for TRX. What you been up to, Crispy?
I'm just working, man. I just wanted to come hear your presentation.
Oh, awesome, man. Thank you. Yeah, see, TRX is still
Thanks for messaging.
Go ahead. Oh, no problem. Of course, man. TRX is still in a motive move. See, this has got nothing for me because I have to wait for something to even come back, and this isn't going to happen for a while. If I'm on the daily, some of the, I usually know about a month in advance and start putting them in the list about a month in advance. So TRX is not going to end up on there, but I do need to add it to my my list here. What coin have you been jonesing on? I know Algorand is the one that you typically
what do you think about Algo, Jules?
I haven't looked at Algo since I probably talked to you last. Let's take a look and see where it's at. Algo.
It's come a far way, man, off of the floor. It looks like it's going to be going to 16, and then from there I have a target of 21. I'd like to get your thoughts on that.
Yeah, let me take a look at it real quick. Now, you, if I remember correctly, you find that the fundamentals of Algo are the reason why you're as interested, right? You see a future for the use of it.
Yes, sir. It's very ahead of the game and the rest of the pack. It's probably the safest protocol anyone could get into. They have something called the Falcon protocol, which essentially makes it quantum proof. So once we start getting into the age of quantum computing, which is probably just right around the corner. Algorand will be the front runner. I mean, it has negative carbon emissions, so it's very eco-friendly, which is a big thing you hear about in crypto is like, oh, it gives off too much emissions. That's why Elon had taken Bitcoin for, well, in his reasoning at least, off of being able to purchase Tesla cars with Bitcoin. His reasoning was the emissions, and so Algorand is negative carbon emissions, so it's very eco-friendly. It just switched its coding language to Python to attract developers because Python is like universally the most common coding language. So they've been they've been really doing a lot during the past couple of years of this bear market improvements, and I think they have a really good place. It's very fast, it's very cheap, so I think it'll be one of the ones to stick around long term. It's one of my favorite coins for sure.
That sounds good. It's got some future proofing built into it, but what does it actually do? What's the purpose of it? What is it actually meant to be used for?
Well, so basically, you can think about it as a computer, and people can go there and build smart contracts on the platform, which would smart contracts you could think of as like an app on your phone. So if you would like think about Algorand as the phone, the smart contracts being the apps, and then it can be used for finance as well for running payment structures, such as in El Salvador. They were running when they adopted Bitcoin for payments. They were running it on Algorand. It's very fast, very cheap to transfer, much like XLM and XRP. And now they're looking to get into like basically replacing Ticketmaster, so you can do like tickets for a Taylor Swift show through Algo. They basically have their hand in almost every sector when it comes to
Can
crypto.
can you currently buy T Swift tickets with Algorand?
Not yet, but they said probably by the end of the year or first quarter next year. That's something they're looking to implement.
Now, the reason why I ask is because the fundamental trading is not my strong sword. I mean, my strength. I'm kind of a pattern trader. I do the idiot waves, as you know, and I do the Fibonacci trades. But one of the things that I've been kind of really advocating for in this coaching stuff that we've done is that the fundamentals really are kind of the strongest analysis you can have on it. It's what actually drives all of the price of the fundamentals. It's the news. It's the strength of the I guess the strength of what it's meant to do. And when you
Right.
compare it to a lot of shitcoins, of course, a lot of shitcoins just don't do anything. There's no purpose. Their goal is
Yeah,
to
man.
one day replace the dollar or something like that. And that's a
Yeah.
long shot bid, but those
Lofty goals.
prices
Yeah.
still, yeah, those prices still are affected by traders and have the same very similar types of technical analysis and movement based on the same types of things. However, if you're going to make an investment or something, you'd probably want to do something that actually has a future to it or is future
Yes,
proof
sir.
like yours and the like. So
Yeah, I'm more I guess fundamental based rather than technical analysis. I'd like to learn that whole side of it once I make my money because I'm starting as an investor, and then once I make my money, then I would like to switch over to the trading side and do more trading. But yes, I focus heavily on fundamentals, and also something you don't hear about much in some of our fellow groups is tokenomics, meaning like total supply, circulating supply, and Algorand is a great example of good tokenomics. It has a circulating supply of 8 billion and a total supply of 8 billion, meaning all the coins have been released in circulation. Because once they release more coins, that's when you see pullbacks, strong pullbacks in these cryptos. So if you look at something like Arbitrum, which is a newer one, they only have 1/10 of the total supply released circulating, meaning like every time they release additional coins, you're going to see a strong drop in the price. So I like to look at tokenomics as well. Um, how many, like Quant is an example of one of my favorite tokenomics. They only have 12 million total supply, so pretty much half the total supply of Bitcoin, and they're all in circulation. So you won't see strong, in theory, strong pullbacks due to the release of more tokens. So I like to look at that as well as fundamentals, the tokenomic side of things.
So I think you've been doing this little bit longer than I have, and it's funny because I feel like when you say that you are you're building your investments first and doing the trading later. I feel like that we're doing the opposite here. We're kind of like, and my goal is to take my earnings from my crazy swing trades and move them and
Yeah.
move that stuff into a spot bag and build my investment pool from there. So
Right.
it's yeah, so it's kind of interesting. I want to. I think it's interesting for kind of the new traders that you can see that there are different styles like that. But
Absolutely.
and what's also kind of curious about what you said too is that you say that you'll learn trading, but I feel a feeling you know trading probably pretty well because you've been a part of the different Discord groups for a while longer than I have, and you've been you know the patterns. You've been hearing people and stuff. So what kind of like how do you go about entering into a trade? And I would assume that it's probably all spot. You don't do any leverage or
Yeah.
futures.
I was doing some leverage, but I haven't been ever since KuCoin went down. Pretty much I just look at cycles as being like the gospel, that's I believe in. I'm very cycle oriented. So my golden rule is when things are down 90 to 99%, it's likely a good buy. And when they're up near all time highs or breaking all time highs, it's a good sell. So I try to just keep it as simple as possible. As far as like um, my accumulating strategy, I've pretty much just because I actually got in like end of 2020, Jules. So I'm pretty new myself, and I had started buying when the people who had been in previously were selling. So I learned from my mistakes. I was buying when I should have been selling, but it was only because I was a newbie, and I didn't know. So now that I have this opportunity where I'm kind of in my first extended bear cycle, I'm just pretty much buying everything that I think is massively undervalued, that has also good utility, that I think will be long term coins and tokens that'll stick around. ISOs, which are like the XLM, XRP, Quant, Algorand, things that actually have like a mission statement of improving the world, making um, cross-border payments more seamless, and doing things that we see the banks are having trouble with in this day and age. So yeah, I've just been accumulating heavier as the price goes down. I started slower towards the end of the previous cycle. Probably got in a little too early, but have definitely weighted my buys towards the bottom. And now I'm just waiting for, I think, 2024, 2025 should bring us into the peak of the next cycle. And I'll take a lot of healthy profits and then look to start trading with them and hopefully quit my job.
So how often do you adjust your trades? I mean, do you look at the charts with everybody else, or what's kind of your daily routine? Do you I mean, is what kind of maintenance do you do on your portfolio? How often do you enter a new trade? How often do you get out of a trade? What type of things do you look
Yeah.
for
Well,
that make you kind of make an adjustment?
if I'm being honest, I'm not doing too much trading right now, Jules. I'm just kind of DCAing. So um,
So explain
usually,
DCA. That's a good one.
okay, so DCA is dollar cost averaging. And so I usually will every Friday, um, whatever I see is like kind of having a red day, I will just add into that and try to get my average as low as possible on the coins that I'm buying. So when they do start to go back up, the quicker and sooner I'll be in profit. But as far as day trading, I'm not really doing a whole lot of that. I'm just focusing on trying to accumulate as much as I can of the coins that I love, and um, at as cheap as possible. So then I can take some really healthy profits here in the next couple of years coming up.
And then what's your sentiment on the overall market, bull market, bear market? What do you see, or do you have any kind of like indicators or things that you look at to indicate where the direction of things?
Yeah, so that of course that's always easier said in hindsight, but in my personal opinion, everyone has a different definition of what's a bear market or a bull market. But for me, I guess I would technically say that the bull market started when we hit the bottom. So that would be in this cycle 15K. When we left 15K, I guess that I would consider that um, the start of the next cycle. And so I would say we're probably about one fourth into the bull cycle, and it'll probably reach its climax. I'm thinking if things line up to previous cycles with the halving coming up next spring, probably October, November 2025, I would think it's safe to assume we could see a new Bitcoin all-time high anytime between next spring and the end of 2025. Yeah.
So any other besides algo, any other coins that you think people should look out for?
Personally, I like Algorand, XLM, XRP, Polkadot is always good. You know, the whales love to play with Polkadot. Um, what else do you have? Arbitrum is a new one that has actually came out during the bear cycle, so it hasn't even seen its first bull cycle yet. And as far as the newer coins go, it's usually their first bull cycle where they make their all-time high. So if you want to look into Arbitrum, the ticker on that is ARB. I've been accumulating that. Um, but yeah, that's a few I would definitely suggest looking into.
Awesome. And Crispy is also one of the funniest people I've ever met in these discords. So yeah, feel free to.
Oh, thank you, brother.
Yeah. Here, and my wife's here right now. She wants to say hi real quick.
Sure.
Hi.
She's about ready to leave for work. So give me 1 second so I can give her a kiss goodbye.
Okay.
Is this where everybody's hiding now?
Yeah, Bees was really quiet, so I came over and was
Yeah,
listening.
man, there's
to
nobody
Jules.
talking in there.
Yeah.
But that's Turbo's driving.
Right.
And
Trago's watching his kid.
Cool. Let's go do a raid. Let's bring them all over here.
That just leaves Isaac and Crazy that are usually on all the time.
Yeah. But I'm actually going to be getting back to work, Jules, but I'm really glad I could stop in. I'd like to do that more often. And as always, love you, brother.
Likewise, man. We do this. It's so far every Monday and Wednesday at 10 a.m. California time. So so far that's the way we're doing. We're gonna miss next Monday, by the way. We'll be here Wednesday, but next Monday for sure will be missed because I'll be under surgery. I'll be under the knife. So that's the big day for me. I'm getting cancer removed and removed permanently.
Oh, wow.
So that's a good thing.
Okay. Well, Godspeed, and let me know how that all goes, Jules.
Thank you. Well, you will be hearing from me hopefully, but not on Monday.
All right, man. And you know where to find me too.
Yeah, thanks for popping in and thanks for giving us a little insight on how Crispy does it. You know what I mean?
My pleasure, man. Take care, Jules. Talk to you later.
You got it, man. We'll see you.
Take care, sir.
So we've got Smokey here. I guess Deffy's not in yet. He said he was going to be here at 10:15. He's a little bit late.
I'm sure he'll make it.
Yeah. I was kind of just going along with. I had a couple people join just to show their style. My goal is to show you some variety. In fact, today I wanted to be a little bit more of a freestyle and a back and forth because I feel like over the last 2 weeks that we've been doing this, there's been some real basic stuff. But I feel like this would be a good opportunity to figure out what your thoughts have been so far, and maybe if you've started to formulate the style or plan or some kind of, if you've looked within and thought about your own psychology and figured out what kind of trading strategy would work for you as well. I thought it might be a good idea to run through some of that too. But like up until now, we've covered a lot of the basics, and there are, this is a very technical. You can get into it and go as deep as you want. But what have your thoughts been so far? Tell me what you've been doing, what you've kind of been thinking about some of the stuff that you've run into, maybe some of the problems you've run into on TradingView, etc. But like, if you wouldn't mind, let me know where you're at and maybe what you think might be your biggest next challenge.
So recently, I've just been setting up different views on the trading platform and trying to predict, see which ways things would go, see if I can make some, lack of a better term, proper estimates, and so that way I can get a little more comfortable with it, and then start doing some real trades. I just got signed up with the trading platform that you told me to use. Pull that up. Forgot its
Femex?
name. Femex, yeah. And I just got my my coin transferred over, so I was about to start doing some real trades. I've actually just been trying to learn and do some like theoretical type stuff before I jumped right in.
Yeah, no, it's a good idea, and TradingView also has the ability to do that in here. I'm trying to remember, where do they do? They have a paper trading platform in TradingView somehow. Hold on a second. What paper trading is basically, you give yourself $1, like $100, $1,000 or whatever, and trade with it and see how you do. But it's all just fake money, But there's an interesting thing that happens when you have real money on the line, though. Paper trading, you could win all day because there's no risk for you, But but the second that it's real money and the emotions kick in, that does change pretty much everything. Because you could be the best paper trader in the world in the second. Okay, so here's a common thing that happens, and you read about this and you hear about this all the time. Professional Wall Street traders who are good, they are really, really good. They do this all day long for other people and make people rich. The second they do it for themselves, they get wrecked, and it's because it's all of a sudden a different emotion for them. And it's very difficult to stop your emotions from getting the best of you.
Wow. Yeah.
Yeah, kind of a crazy thing. I'm going to try and find the paper trade feature in TradingView. I know they're in there. Let me see. Look it up.
Yeah, I would love that. Actually, right now I'm looking at APE. There's not a lot of support points for it right now, and I'm kind of wagering that it's going to keep going up. But I wanted to see what you guys would think.
It's going well. It's just a matter of time before it dips. That's the thing. This is a patience game. I've been frustrated with it because I've been waiting for it to dip, and it's done nothing but the opposite since it's hit this. Was this the bottom? No, since this was the bottom that I've been hoping for right here. And so every chance that it got, it's just getting bigger and bigger. But I've also have it kind of expect that does happen very often, especially when you get like a. This is a well, it's a different kind of spike. It's a capitulation type of spike where it comes down and then it quickly gets back up. But when it typically does that, what's that?
Are you broadcasting, or am I just not smart and can't see it?
I don't have my screen. You're right. Let me get that going. Thank you for pointing that out. I'm online live right now, but I have been not sharing my screen.
Usually it's me. I'm so glad.
Yeah, no, thanks, man. I have to actually physically go in there and do it, so sometimes I forget. But anyway, my point being is I've been watching it since it made this spike right here, and it typically does will increase. There's going to be something that it's probably this that's going to end up being the reversal. Let's see. It's not this one because it would have already passed. Maybe it's this one. There it is.
Well,
that's where we're at right now.
I wasn't finding too many support points and stuff like that, so I wanted to see what you guys thought about it.
Yeah, I see. This is probably what's where it's at right now. Typically, it's so what probably happened is let me find a different channel. There's typically something that that it's trying to retest on that initial move upward. Let's see what we got. So this would be. Let me get the right. Yeah, that's not it. Yeah, I can't find it. If I'm charting for a long time, it's usually pretty predictable because it'll be trying to retest something, either a base channel or something or something like that. Right now, I don't have a really good idea of what it's trying to retest. It might even just be a fib level. There we are. We're at the golden ratio on this right here on the way down, so that could be it. But this could be the peak that we're waiting for it to finally drop into this area again. I'd hate for the thing I'm worried about the most is if this was the spike to the golden zone and that's it. You rarely see it spike down and that's all it does. Typically, if it spikes, it usually will try and find the bottom of that spike before it finds a new high, which is a little odd because it's actually finding a new high first. So but I'm still waiting for that retracement. I've got my fib set up for this level right here. It could bounce down to here off of these right here and go up, or I think the bigger picture is waiting for something along these lines for it to come in. This would be wonderful if it did make it in here. But I would put a buy-in in this area. I've already done the math to make sure that I can afford a drop all the way down into here.
So in the past, I've always kind of considered it if Bitcoin was doing well. I felt like all the other coins also kind of followed a similar trend, for lack of a better term. So not to say that they follow it exactly, but people for some reason seem to trade or believe that if Bitcoin's falling, they're all falling, or vice versa.
Yeah, there's a couple coins, I guess, for the lack of a better term, to I think look at in order to get a good gauge for that. One is the total market cap. So if you were to take all of crypto's market cap, everything, Bitcoin, Ethereum, Dogecoin, Pepe, shitcoins, and everything, all the like, you can trade it. You can take a look at its price action, the entire market's price action, by typing in total into here too. So this is the total crypto market cap. So that's a good way to look at what the total market is doing as a whole. And then you also have and I'll go on over here, maybe it's in this one. Hold on. There's the Bitcoin dominance. Hold on one second. I got a text. Respond to my wife's text. Okay. So there's a Bitcoin dominance, and I'm going to find it because I think it's just BTC.D. I thought I had it in here. Okay, if not, I'll just I'll find it in here. But and what this measures Bitcoin versus the rest of the market, dominance wise. So when you see this going up, it's kind of a weird one. I thought that there was that's why it's like this because from March until 2014, look at it, and this is in percentage. Bitcoin was 90-something% of the coin market, right? And rightfully so, because I think Bitcoin was probably the only other coin. There might have been Ethereum at this point right here, but 98% all the way up until this point right here was of all trading on crypto was Bitcoin. But then, of course, as a lot of other coins and altcoins came around, you started to see Bitcoin lose dominance, and especially let's see where we got. 2018, I guess, was the low of Bitcoin dominance. I don't know what this means. Maybe this was when Ethereum started to really compete, or other altcoins started to come on the market. Maybe this is just a big move. A lot of exchanges came in and started offering a bunch more. But ever since then, Bitcoin has gained dominance, lost dominance, gained dominance, and so anytime you see a spike like this is when Bitcoin is stronger in comparison to the other coins. So this is just one of these. I guess it's not a coin, but one of the different charts that you can look at is you can actually measure those charts. And by the way, they all work on the same kind of chart patterns as everything else. If I were to go to total again, you can absolutely do the same technical analysis, and I do it all the time too. Finding out where we are in the total, what to expect, because this is going to impact the rest of the crypto market just as well as BTC. So if you were to go back to that BTC dominance, and by the way, you can do this for other coins too. You can do Ethereum dominance. You can probably do Doge dominance, and but right now BTC is still trading at half of the trades. More than half of the trades in crypto are with BTC. So if you think about what that means, BTC, if something happens to BTC, it's going to affect the rest of the market. It absolutely is. Now, there are also times when it affects it more than others. And if you were to go back in times like, let's see, let me go back to the total. If you were to go back in times where you had, like the all-time high, for examples, and we would see, right after the peak, we would see these huge dips, massive dips. And then they would come back up. But when they did that, it almost shocked the altcoin market so bad that when there's a big move in Bitcoin, all of a sudden, for one reason or another, all other coins start to like just mimic it almost perfectly. So right now, because there's been a lot of disconnect since some of those big market shakeups, you do have a lot more randomness in the market with the altcoins. Like today's a good day, for example, because you have Floki's 20% up today, and then you've got CFX that's 5% down, or Link that's 6% down. So it's a volatile day, and the coins are all over the place. But again, you see one massive move for Bitcoin, and the next thing you know, all of these almost look identical. They're all up and down the same. You can go on the minute charts of all of them, and they're almost doing the exact same thing. It's kind of interesting to see how that happens.
Yeah, that's what I was thinking, but I didn't. I love the total and the dominance charts. I definitely have to keep an eye on them.
Yeah, this is something I will typically do a lot of work on the total, because when I think that doing technical analysis on this one is a good way of making sure that you're not looking for some kind of a major disaster, or you can kind of get a good idea of what how the rest of the market should kind of react to this. The other indicators that you see a lot of other traders use, and I honestly, quite honestly, I never look, and I should, but those are like the Dow, the S&P 500, the dollar index when it comes to, like, the DXY is the dollar index. You can see the strength of the dollar in comparison to the rest of the world's currencies. The SPY is the S&P 500. So you hear a lot of people ask about SPY, and they'll even ask me to do technical analysis on the SPY, and I like I said, I never use it as a comparison for the rest of the market, but I probably should. Sorry, looking it up right now, trying to see what. Oh, I know, I'm on cryptos. Hold on, SPY.
And then something that Defi says all the time is that whenever there's a dip in the stock, in the Dow, he always thinks that there's a slight corresponding uptick in crypto, or vice versa.
Yeah, that's very possible, and that's guys. If Crispy was still around, he might explain the money flow a lot more. You'll also notice that when Bitcoin's pumping, when it stops pumping, you'll see the dominance go down, because it's when the money flows out of Bitcoin and into other coins. So there are little things like that. I'm going to look at the Dow real quick.
This is probably a very specific question, but the total, does that also include stable coins?
That is a very good question. I don't know the answer to that.
Because that would explain the dips in, say, Bitcoin when it's not trusted. People all put it into a stable coin.
Yeah, well, that makes sense. It's not that I mean, they trade it out of Bitcoin, and typically on the exchanges, they're all stable coins, so that's where it goes. Yeah, that makes a lot of sense. I would imagine that they probably, I would think that they'd have to exclude stable coins. Yeah, because I don't know that this is all of the money in exchanges, but it's supposed to be all the money that's being purchased and used in for coins.
Exclude stablecoin, right? Because stablecoin would be a representation of money in crypto, not anything else. It's just a placeholder, a bookmark.
Yeah, but wouldn't the more accurate index of a total market cap be coins that aren't being coins that are being purchased as for trading and investments? And I would think that if you included stable coins into that, then it would skew that number down, and it would tell you more about what kind of money is in exchanges versus what kind of money is actually being traded in coins and altcoins. But I could be wrong.
Well,
This is
like
speculation.
In an ideal world, I feel like you should be right. But in the current situation of crypto and the way it works, where a stable coin can drop to zero, that's just money in crypto. It's not stable. You know what I'm saying? Like it's just as risky as every other goddamn coin.
Yeah, good point. I'll have to write that down and see if I can get an answer to that.
And from a technical side, I imagine that the total is just tracking trades, and it would only subtract money if it was cashed out, for lack of a better term. So if it's being traded from one coin to another, I imagine it would just consider it a trade.
Well, yeah, it wouldn't consider it as cashed out. It would consider it still as crypto. So if you started with cash and turned it into Bitcoin and withdrew it as a stable coin, I don't think it would show as being withdrawn. It just wouldn't be part of the BTC dominance.
Well, anyways, I wasn't trying to give you homework or nothing. I was just asking the question. But it helps put it in perspective for me, and I think I will use that as a tool.
Yeah, no, I think, and it's a great perspective. One thing about the DAO too is, what I mentioned, I think in last week was, like the DAO changes every time that there's a company that doesn't that falls out of the top 30 companies in the country. The DAO will, the Dow Jones average will remove that company from the DAO and add the company that isn't. So it's always going to be the top 30 companies in the country. And so there's a little bit of a thing that does to price. It makes it an exponentially moving asset, I guess, for the better term, lack of better term. And that being that it's not going to have as many like downward corrections because it's going to be based, it's a constantly changing index. The Dow today does not look the same. It's not made up of the same companies as it was, 5 years ago, last year, 10 years ago, or et cetera. So that's why it does look different. It's a lot more linear, I guess, when it comes to the diagonals. But it does also show the strength of the economy as a whole too, because if the top 30 companies in the world are their values dipping, in this case during I'm assuming this is the Great Depression, 85%, 86%. Then that's a sign that the economy as a whole is doing that. And that's why they use the Dow as that index. But when it comes to how well the Dow is doing, it's going to constantly be doing better because we're getting rid of the companies that suck, and we're only putting the best possible companies in the country there. So, Deffy, you joined a little bit late. I wanted this to be more of a kind of a freestyle format. I do have some technical analysis that I can get into. I of course think that one thing we should do is try to coach as much as possible on current technical analysis, current today's movements and stuff like that. But I've also given you a lot of like real basic kind of foundational type of information so far. So I wanted to use today possibly to maybe hear your input and possibly figure out how to maybe take some of the styles and stuff that you guys are thinking, and maybe start to craft our like coaching sessions after that. So up to this point, Duffy, have you had any questions, or have you started to establish any type of maybe trading strategy, or maybe even given some thought to the type of thing that you want to do?
Yeah, what it is, I just have I just been investing in crypto long term. So I'm just trying to figure out how to slowly bring that into the day trading aspect of knowing when the right time is to pull out and then rebuy. Um, so yeah, right now, like I'm on Ethereum. Like mainly I'm on Ethereum and a little bit of Bitcoin. Um, but I'm just trying to watch them, and I think it's just a matter of like you said, it's just instead of just trading on paper, I'm just watch when I think the good time to sell Ethereum and then rebuy later on. But I think that I think it was like maybe toward the end of November that I will start actually looking at actually pulling out of Ethereum, selling, but I'm not sure. So I don't have the enough knowledge to really trust myself yet. So
Yeah.
I'm just gonna
So
keep it long term until it's ready to go.
And you and I have talked offline about a little bit about the how you've got into crypto and kind of your current situation, where you have what's called a pretty decent spot bag, right? Because you've been investing spot for a while. You've been mining Ethereum for a while, so you have a lot of that going on. By the way, mining, I'd love to catch up on the mining situation. I haven't talked to you about that in a long time, and I wanted to see how that's changed since the last time I talked, because I really haven't paid much attention to how mining's done or any changes. So that's something I'm very interested in discussing too.
It's generally
Yeah.
very good, right?
Well, right now, definitely not mining Ethereum. I think that Smokey and me, that's how we both kind of got into it. We bought mining equipment and put it on. I think that we got like maybe, I think like 60% of our money back or 70% of our money back, but then the value of Ethereum has gone up a lot since then too. So made our money back, but honestly, we probably would have been better off just trading.
Oh, really? That's I'm sorry to hear that. Yeah, that's too bad. But I think that might change once the value of Ethereum probably goes back, because I know that a lot of the Ethereum that you mined was when it was in its lower dollar amounts, and so hopefully that'll make it worth it. I'm bummed to hear about that. But that being said, having that pot there does give you the ability to kind of create what and I briefly mentioned this to you via text the other day. You I think are in a good position where that I would like to kind of try to get myself into, but I'm doing it the other way around. I am taking my crazy day swing trades and putting them into a spot bag that I'm building, where you kind of have the spot bag that you can take a little bit out, do some trading with it, and then with that profit put it back into the spot, and that's where it'll even kind of like exponentially grow from there. But from a riskless sense, in the fact that you're not risking leverage anymore, you're just risking your it's an investment instead of a trade. You know what I mean?
Yeah, exactly.
So yeah, and I think that's probably a good strategy. And so you've been looking at Ethereum, and you want to try and figure out if it's a good time to sell. Take some of the Ethereum from your spot bag and maybe get into trading.
Yeah.
Okay, so yeah, and how you'd probably want to do that too, because you'd want to, the ideal way to do it, if you have the patience for it, is to sell it when it's doing well. Maybe take a small proportion of it, maybe 1,000 or something like that, and then wait for the right opportunity, either in Ethereum or something else, when there's a dip, that you can kind of watch it go from there.
Yeah, I've been keeping an eye on miners and stuff like that. I can tell you right now with 90% certainty that if you try to get into mining with a GPU, you're just going to waste your money. And the only way to make anything mining is to actually buy ASCII miners, which some of them are pretty profitable. Like right now, the biggest one that people are mining is called K Heavy Hash, which is KAS, if you want to look it up.
What make okay? So just for the mining topic right now, because this is interesting and I get to learn something. But how does this work and what's the benefit? Like, tell me how. Like, I mean, we talked about ASCII mining before, and I knew that I knew I understood it when you explained it to me, but I've completely forgotten about it since. But those are like the machines that you kind of buy for like one coin only type of thing.
So typically ASCII machines are basically purpose-built machines. They only do one thing, quote unquote. And typically they'll do one algorithm and then multiple coins all work on the same algorithm for mining. So like if you did the Bitcoin one, you also got all the original coins kind of like that. And then if you did an Ethereum type algorithm, you'd get a whole bunch of Ethereum coins that were based off of that. But there's several different ones now. But you're talking about like a $2,000 to $7,000 investment, and then depending on which one it is and which coins are doing really well, you can make anywhere between $200 a day to $10 a day, and it also gets influenced by the market, obviously. Like I said, right now, KAS is the winner. Like I can look it up right now. People are making anywhere between $100 and $200 a day on the same miner that 6 months ago they could only make $10 a day.
Yeah, so you
And
have
then
to buy the equipment fast and make money fast because it will just go away pretty quick on those ASCII machines. That's why we stayed away from that.
And then you guys were what was it with was it Hex with the antennas? What was that?
Oh yeah, that was the helium miners. Did a couple of those. Those were like creating hotspots throughout the city. It was really hot at first, and then it just kind of died down.
The
So
cool thing about that one is it was based off of actual work rather than just like I'm going to sit here and solve an algorithm. It's based on people using your network, and the more the network gets used, the more the coin gets value.
So was the reason for its lack of activity over the last who knows how long due to the lack of the bear crypto market, or did something happen to the company, or what's the deal? Because I see that as something that that absolutely has a very, very useful. I mean, the use for that was incredible. My understanding was that this antenna was allowing you to use resources on your computer to somehow mine crypto.
No, it was basically, if you think of it as a new Wi-Fi network, but on a different frequency from conventional Wi-Fi, and then as it would use ticket authentications from the token exchanges as the security for the network, for the transactions between the Wi-Fi user and the computer. The difference was that it was basically using your internet, but it can only use a tiny bit at a time because the frequency that they chose was very long range, but slow data rates. So it didn't really tax anybody individually on the internet, but then it allowed them to generate some coin based on other people using their access point.
Gotcha. Yeah, so I would imagine that would be considered a decentralization coin too, right?
Yes, and
Yeah,
the part of the problem was that when there was the big dip in coin, was it 2 years ago? Their market plan just couldn't keep up with the loss in value.
Oh, so they're no longer around then. Did it go belly up?
No, it's still working. It's still there. It's just it's not as
Profitable.
profitable, so it's not growing like it was 2 years ago. 2 years ago, it was growing like crazy, but now it's pretty much at a standstill. People still use it. It's just it's not like it was before.
Was there anything
Okay.
competing with it as far as that particular purpose? And the reason why I ask is because we've seen a bottom, and we have not yet seen anything close to, like, I mean, I think that the closest we've seen to the adoption of crypto is I mean, I don't even I couldn't even tell you, but I just don't feel like we're anywhere. We're not very close to the adoption of crypto, but that point will come, and that's going to be what I like to call as an Elliott waiver. That's where the 3 wave starts. Does that make sense? Because that's when all of a sudden, more and more people are going to first of all have interest in cryptocurrency, but something's going to happen where there's going to be an actual need to use it. Where once Web3 comes out and is very crypto centric as far as like just the functioning and how it works, then I would think that would be when like I said, we'd be at a point of adoption. But when that happens, you're going to see kind of the bones of companies like this all of a sudden get reinvestments because they're going to find real use for it. And so maybe, I mean, do you see that maybe there's something like that could be in the in the future for it?
Well, I mean, that was always the idea. Basically, it was you buy the coin, and then you can use that as currency to access the network anywhere there were access points, right? So you would use that to pay to access the network, and then people who were giving you access to their internet would get paid in that coin. Plus, it would generate new coin, things like that. I don't know if anyone else is doing something similar. That I mean, there's a couple of internet transactions for securities, internet security, but it's not like people actively use that. They're just using the transaction codes from the generating of the coins for security purposes online. Um, there are other companies that do the what XRP does, but just not with the coin. So I mean, they do have competitors. They're just not crypto competitors.
Sure, gotcha. Okay, so I guess with all of the kind of and I guess we started a little bit late. I was going to say we're already an hour into this. Jeez. But the in regards to your experience so far, you've downloaded the program, you've got money into it, you've seen some strategies, you've seen kind of how some basic technical analysis works. You've I think a good thing to do would be to like maybe go through my processes of technical analysis and look at some of the indicators and maybe get you guys to answer or ask some questions while that's going on. But I think that what I'd really like to use this coaching or I want to make sure that oftentimes or often enough during what we're doing that I check in with you guys, check in to see if there's maybe a strategy that you're considering, checking to see what direction you want to take it. That way, this is custom and I'm not the one leading it. I'm merely just trying to see how I can help you guys with your journey into this. So, I guess if you have anything like that right now in the meantime, what type of thoughts have you had? What direction are you thinking? Is there a strategy or have you seen something online that maybe you had some questions about or wanted to maybe explore? And my goal would be to take it from like, there's a mindset of a trader that's done this a while that understands how these videos are and why they work and the like. And then there's kind of a mindset of somebody that's going new and seeing and kind of excited and realizing, oh wow, if I just do this, then this is going to work every time. And then you try it and you fail and you just get wrecked, So I want to kind of make sure that to understand where you guys are at and maybe what you guys think might be the next a couple good potential next steps or something.
Yeah, I've been clicking around the different coins, and I just pulled my money out of Sol. I think that one. I was wondering what your opinion on that is, because I felt like it was going to go down soon, but I'm really new at this.
No, I'd say that that's probably you see all the activity and of course like how long can it sustain itself, knowing that the kind of the way it moves is to is going to have natural pullbacks. It has to go hot and cold, right? I don't think you're wrong. I think Sol is at the top of its cycle right now. But it also depends on the type of investor that you're in. Like for instance, I'm in Sol at a very safe place right here, and my goal with Sol with Solano is to hold it as long as I can because I don't think it ever comes back from here. Now, I mean, next week I could be eating my words. I mean, that's just the way that this market works. It's very typical because you say things like that when you're feeling confident and cocky, and you feel confident and cocky after you've had some major wins, and that's typically the time when you just when the worst thing you could think could happen. So I mean, I'm not joking around when I say that my triggers for when I think I'm about ready to get wrecked is when I start bragging, when I start talking to my wife about my trades, when I start, that's when I know that like the psychologically that correction's probably ready. And I've noticed that since day one in trading, by the way. But that tends to be the case. If you're a short-term trader, I would think that we're bound to have a pullback at some point, and we are closer to the top than the bottom of that pullback of that cycle. Now I'm going to show you some technical analysis, that we can kind of use to maybe make some of those opinions stronger or shed some light on them at least. And we always start at the higher time frames. I'm not going to start with a month on Solana because Solana hasn't been around long enough to have a lot. I mean, I guess that they've been around long enough to have. This is a good sign on Solana. If you're a long-term trader and you see a cross like this, you go from the red. Red means the gas is on to the downside. Pink means that the accelerator pedal is no longer pressed, right? And then you get the dark green on the upside. That means the gas is on to the upside. You've got this cross right here, which means the faster moving average has moved up across the slower moving average. So just in the little data that we have here, and as far as months are concerned, we only have enough data that goes. It's about a year's worth of data because these indicators are need this much time. Let's see what this is. What's happening here? That's 26. So that's about. So this is 2 years. So this moving average is based on 2 years worth of averages. So its first point is going to be 2 years into it. This one, it wouldn't make. Oh, I'm sorry. This is the faster one. This one's the slower one, and this one is, this one required. That's why I did that. What's 1,000 days? 1,003 days. 33 bars. 33 months, right? So that's 33 months right there of data that was collected in order for this one to even like print itself. Does that make sense?
Yeah.
Okay, so but on the monthly, that does look really good, but that's a good sign. This cross, you got the foot on the gas and the upside, you got price action to match it. So as far as like that kind of strength, that's a bullish one. But again, long term, we're talking, this is months. So this is the kind of action you should expect this type of green for a while, especially because this looks like a pretty aggressive move. It goes from kind of a low and it shoots right through and it creates a lot of area. It's the distance between these two indicators is spreading, and that's a good sign for momentum for Sol. So long term, this right here is bullish as fuck. Short term, and I'm going to go one indicator at a time on this one. This is called the MACD, the Moving Average Convergence Divergence indicator. A lot of the same thing. And when you look at the MACD, you want to look at movement that is kind of long term, like that, upwards like that. And this is good. This is another kind of the same type of of indications on the weekly or on the monthly are also happening on the weekly. So you've got the cross here. It kind of touched, it narrowed. You can see it came off the gas a little. Put the gas on right here, and you can see how it relates to price. Put the gas on. This is, the gas is off, and you can see how the gas is off here on price too. You get a little oomph, these are kind of small. These are real close to the median line, so they're not big moves at all. But the fact that right now you have the gas is on, these averages are getting further apart. So even on the weekly, this is still bullish. This still looks like, it looks more like this line is going to continue up in this direction, and this line is going to continue up in kind of that direction, which would lead this to be more, it would be more widening. What you don't want to see, even kind of on the long term, because it affects the short term, is you don't want to see these lines kind of, this one coming down and, this one still kind of like moving like that, because then you'd have an indication that this one's losing steam. At this point, these will probably turn light green, and you'd probably have already hit a top, and it's on its way to a newer low. So then we take it on the next time frame down. We'll go to the daily. Still, pretty bullish looking. You can see that starting at this point right here, we had it's broadening, it's widening. You're seeing a little tick closer to kind of a come down. That could mean that it'll drop and maybe drop through it again. You see that it's taken off the gas right here on this last candle right here. So there is that kind of possibility that at least we've seen some cooling down over the last week or so on this. And you can see the indication in how that works on price too. You can see that it's cooled down just a little bit. Now these are lagging indicators too, so you can see that it did that right here. It kind of moved in a little closer, and then it took another bump up. This has been pretty volatile as far as you've seen the gas on. It kind of stops, and then the gas on, and then stops, and then gas on. This is typical of an impulse. You see that, especially when you're talking about the waves again. This would be like a wave 1, 2, 3, 4, 5. That's kind of typical of that 5-wave structure. Again, the 5-wave is typically where it needs to cool down and actually come back to that larger, golden zone or retrace. So then you go down to the 4-hour, and you see that okay, it's a little bit of a different story on the 4-hour. You can see that it's definitely trending downward on the 4-hour now. It's no longer in the upward trend like it is on the daily, weekly, monthly, etc. So on the 4-hour, we do have some cooling. We've seen a cross. This thing's moved. The line has moved down. The faster one has moved down into the slower one. You've also seen us, get into the red territory, and the gas is on the red territory. We're still accelerating downward. So for the 4-hour, this is kind of a little more of a bearish scenario. 4-hour is still kind of a high time framing. The kind of price activity that plays out over the 4-hour tends to happen over the course of a couple days. So you'll see at some point, maybe the next bearish sign that I would look for is these moving averages to cross past this zero, this neutral, not neutral zone, but the median zone area. So as this goes down, you'll see it kind of the difference, between these areas. Actually, this isn't a good example here because this is kind of happens during some accumulation, but this is where the accumulation happens too. Which is a different kind of trading than impulse trading. But you'd want to make sure to see like where those lines are at. Does it look like it's probably going to cross into this area? That's typically bearish for, over the course of a couple days, you can kind of count on some bearish move. And then let's go to the hourly. So now we're in bearish territory. You can see that we had our peak up here. Now this is divergent again, and the way that I would explain the divergence too, and you'll see it on the RSI is kind of where the big divergences show up. But when and I want to go back to the to the Elliott waves again, just because this is how I know it, and I think it's a really good way to explain it that most people don't get the insight to. But the Elliott waves look like this. And I'll make these things have lines. There we go, so you can see it. So all the Elliott waves kind of look like this. And you have that one wave, which is that initial burst. You have the two wave, but the impulse wave is typically the third one. Remember, it's the third wave is never the smallest wave. So it's typically the one that has the most strength, the most power, the most oomph. And so when you have that kind of strength and oomph, and then come down, that fifth wave is kind of just that's when retail comes in. It's like the weakest of the waves typically, even though you do get sometimes that the five wave is the big impulse wave, but it's a lot more rare. The three wave more than often is the big one that typically has the biggest increases, the strongest, etc. Now, that being said, since this is a strong one and this is the weak one, you often see divergence. And in this case, this one right here would be the strong three wave. This is let's see, hold on a second. Because this is actually showing a little bit different than it normally would. Because it lost strength. And then it never really had a lot of strength, but it still looks like it continued the three wave. I would still look at this as the three. But if I were to read this right here, this tells a little bit of a kind of a more convincing story, because you see that the big impulse right here is this one right here. This would be the three wave. You see that it doesn't get stronger than this, even though price very much went above that. So this is a lot weaker. This is retail. This is the kind of when these are the FOMOs, the ones that kind of get in, and that's typically the weaker push. There's still money to be made there, but as far as strength wise, it really doesn't outdo this right here. And this didn't get as strong of price. So this is called divergence. Divergence is one of the strongest possible things you could look for. And so much so that I've seen YouTubers say that you're a real trader when you're only trading on price action and divergence. So you're only looking at the RSI and divergence. And I can see why they say that, because if you see this, you can absolutely see that this move right here is stronger of a move than this one was, so much so that it didn't even overcome this in some of the metrics. So I would say that this is almost positively a 5 on the wave 5. So this is the wave 4, this is the wave 5 on the smaller time scale. Smaller time scale. A lot of people think the 1 hour is still kind of a large time scale, because this is still over. The stuff that happens on the hourly still affects and happens over the course of a day or two, 3 days, or maybe even longer sometimes. And if you're day trading, you're literally on the 1 minute through 5 minute. So a lot of those people think a 1 hour is still kind of a high time frame. I don't think it is, because I like to trade on the daily and weekly. Now, one thing about... Oh, go ahead.
That's another thing I've been kind of going back and forth with. I've been trying to stay between the 1 hour and 1 day, and then I would go back into like the week to try and reaffirm what I'm already trying to do, type of thing. But I've been trying to... I don't know if it's correct, but I've been sticking between the 1 hour and 1 day to try and make my decisions or predictions, and then I would go back to look for supporting evidence, for lack of if that's a good way to put it. Yeah, no, it's a good habit to get into, and kind of the way that I show you is, remember this indicator that it looks like an absolute mess, and I totally get that. It's Tron.
Yeah, I know, right? But when I see this, I know I can see that, you know, this. Okay, so I don't know if you can see this in this, but there's one line that goes like this. You see it, the gray one,
Yeah.
and it steps because literally these are probably weeks. You know, each of these is probably 7 days. Each of these steps. So I know that this is the weekly. So like, you know, I know that when it's, you know, coming down here, the weekly is cool, but you can kind of zoom in right here and see that even though the weekly is cool, you know, the 1 hour, this is going to be the 1 hour. This will be the 4 hour. I can tell just because it's the next one that gets a little more, you know, faster oscillations. This one's the daily. I can tell on the daily, so you can see at any time during like right here. The weekly never touched down to the bottom, but I can see in hindsight that it probably is because a lot of the smaller time frames were really staying high up here. The daily kind of bounced back. You know, there was a lot of strength, and so the weekly never really got down to this. So let's see. This is September of 2023. Let's see what that looks here.
Is that trade volumes? What is this?
So this is the RSI. It's not volume. It's an indicator that takes the here. Let me go back because I can always. I like to be precise in how I explain this, because you know what I'll do. This will be fun. I'll ask ChatGPT how to explain RSI.
Oh yeah, I don't need a dictionary. I'm just trying to figure out what this area is all.
Give me 1 second, okay?
Yeah, no problem.
Okay, let's see what ChatGPT has to say.
Hey, can you guys hear me?
Yeah, you're good.
Hey, Duffy, did you get plugged in on that new trading platform, the Fomex?
I have not. No.
All right.
I'm just waiting for you to kind of mess with it, and then we'll meet up this week and go through everything with you.
Yeah, after we're done here, I'm gonna take the rest of the day off. But then tomorrow, I'm gonna get my coin transferred over. I'm gonna start doing some like $1 to $5 trades just to get used to the tools.
Okay. Oh, did I tell you that my truck got stolen, by the way?
Your truck got stolen? Where?
Saturday.
You're kidding, man. I'm sorry. That sucks. Where? Out in front of your house?
Yeah.
No way.
The 3500?
Yeah, the truck.
The one you got from ASAP?
Yeah.
Holy shit. That's
Yeah.
crazy.
The stupid thing that the insurance company's only gonna probably give me only like $5,000 for the truck, but to buy it you have to spend $25,000, even in the current market right now.
How are they justifying that?
I don't know. It's just how the insurance companies always try to do it, but gotta figure out how to fight them on it.
It's supposed to be Blue Book, isn't it?
Yeah. So we'll see.
Yeah, because that thing's got to be way. I mean, it's a truck, so it's going to be above Blue Book anyways. But we have to give you Blue Book.
Yeah. Oh well.
Okay, ChatGPT is almost done. I have to give it a couple corrections because it also gave the kind of definition based on a lot of other things that we haven't really gone through yet either. So I wanted to kind of, I have to make sure to break it down as simple as possible in a format that flows or that tells the story right. So give me one more second.
That's all good. And then people have been gaslighting ChatGPT so long that it's kind of gotten a little stupid too.
Okay, this should be the prompt. So just read it as it prints it. All right, let's see. Okay, so this is the stochastic RSI. It's a tool used in finance, particularly in stock trading, to help predict future price movements. It's like a more sensitive version of the RSI. Okay, you know what? It did the damn thing again. Okay, so you start with it, and here's how it's calculated. You start with the RSI. This is a measure that tells you if a stock is potentially overbought, or oversold. Overbought meaning too many people have bought it and the price might go down. Oversold meaning that the price might go up. When it's overbought, it's typically so I'm going to go back to the other RSI real quick because remember this is the stochastic RSI, which is the oscillating RSI. It always goes from 0 to 100, and then you have what do you call it? The regular RSI, standard RSI, and standard RSI is it doesn't oscillate. It is a range from 0 to 100, and 0 being the absolute lowest, and I guess it does go beyond 100. But I don't think price gets past the hundreds very often. I'm trying to think of when. Oh, here we go. We got close to 100 on Solana in the very, very beginning. That seems like. Let's look at. We'll use BTC as an example that way because it has the history. BTC's RSI hit 96 in January of 21. That was hold on. So that was in the wave 3 of the big the bull run. So that's when we got the highest RSI on BTC. Well, there was this too. Let's see what happened here. This was in 2013. So anyway, but it doesn't necessarily oscillate. Now, if you were to ask me what is the definition of a bull market versus bear market, everybody has a different definition. We talked about that earlier. But my definition of a bull market would be when RSI on a high time frame doesn't drop below the 50 much, or doesn't drop below the median line. This is the 50 right here. So during this time right here, I can already tell that that's a major bull run. A bear market would be when it's the opposite, when it doesn't go above the 50 line much. So this would be the bear market. And these are the peaks. So I'm talking about a lot of people trade on the RSI. This is one of the most I'd say it's probably the most common used indicator. And let me get ChatGPT to just explain how standard RSI is calculated.
I didn't mean this to turn into a school learning event. I was just curious.
No, it's all good. I forgot your question though.
It was just what's it using as a measure to create these, if it was based on trading volume or whatever.
Yeah.
put this in perspective.
So it's a ratio of the average gain to the average loss. So okay, so what you do is you look at the price changes for a given period, right? And that's what these when you go back. 10 in this case, these are the kind of the details to how far back we go. And you can change it. I mentioned the other day that you can change all of these. You can have the look back periods being longer or shorter if you think that it might make a difference in your style of trading. So if you for each so let's just say you pick a time frame like 14 days. This is your time frame for measuring how the stock has been performing. You look for each day in your chosen period, check if the stock's price went up or down compared to the previous day. Got it? And then you calculate the average gains and losses. Add up all the price increases over your period and divide it by the number of days. So in my case, it was 14, I think, right? Or I'm sorry, 10. A lot of people use 14. I think 14 is the most common. So this one says 14. So you do the same for the days when the price went down. Add all of the losses and divide by that number of days. And so it's a ratio of the average gain to the average loss. You calculate it by dividing the average gain by the average loss. Does that make sense?
Kind of 50-50 on me.
Yeah. It's like, okay, so if you were to go back the last, in my case, it's 10 days, right? Or 10, it's not 10 days. In this case, we're on the week. So in this case, it's 10 weeks. So we're looking back for this indicator is looking back 10 weeks, right? And it's in that time frame. It's looking. Let's see. So we're only going to be looking at. We're only going to in the case to determine RSI. We're only going to be looking 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we're taking this time period only. Let's move this down so that we can see the candles. So we're taking this time period right here, right? Now we're looking to see if price went up or down in comparison to the previous in the previous candle, right?
Yeah.
So you add up all of the price increases over this period, and so you take the average gains, and you make an average out of that over the last 10 days, right? And you do the same for the price going down. So in this case, you also include this, you include this decrease, and probably the top of this candle to the bottom of this candle too. And then okay. So after that, you make a ratio out of the average gains to average losses, and you divide the average gain by the average loss, and then at that point it turns into a number that's typically between 0 and 100. And on this, you have that plotted and the lines that kind of just draw the different plots. So what that does is it takes the most recent price action to determine here if that is strength. Does that make sense?
So over the average of that time recently, in the last whatever amount of time, it's been starting to go down from that.
Yeah, it's been maxed out, not maxed out, but it's gone really high. It's gotten to 80 on the weekly. Now, which is the highest it's been since the bull run, right?
Right.
And that, again, that's taking the the average increase from candle to candle and the average decrease from candle to candle, and created an average out of that, and that's how it determines its strength. Showing that yes, if you were to look at the price action, you can tell that it's obviously been pretty strong, because we've seen a pretty significant increase in price over the last month or so. But not as strong as it was over in this area, where you can see that these candles were significantly, more of a, what's it called? The difference is, from here to here is a very big difference from here to here, and the kind of price activity that was affecting that RSI number in this area is going to be a lot more significant, and it ends up getting a lot higher. So that's how RSI is calculated, and that's how it's calculated as strength. But it's still based on price. This one's not based on volume. That's what it was: volume and divergence. So if you were to see volume divergences and RSI divergences, those are some of the strongest calculations, strongest indicators.
Okay, so it's not based on trading or trading volume. It's based on the current price and over an average of time.
Yeah, it's how price has moved, increased or decreased over the last certain amount of time frames, and in my case, it's 10 days.
Okay, I can work with that. Thank you.
Yeah.
Sorry, I have to put things in perspective.
Good. Okay, and now the stochastic is different, because the stochastic. Let me go back to this one. Okay, so the stochastic takes the RSI, right? And let's see. You find the highs and lows of the RSI over the course of that, the time frame that you're looking at. In this case, it's the weekly. And you find out where the current RSI sits within the high-low range and express it as a percentage. Does that make sense? So instead of it being as a price, or as a value, an average, it puts it down to a percentage. So there's a calculation built into the stochastic RSI that, even in times of accumulation, it still will oscillate typically to the 100 range and all the way down to the 0 range. You do get a lot of like in betweens, but you almost always have one point where it gets to the 100, and even if it oscillates in there, it'll oscillate down to the 0 again. And that calculation is built into it.
Even during a rise, is what you're saying?
Yeah, even during a rise, you'll see that it'll come down, but it eventually hit the 100, and stay in the 100. It could stay in the 100 for a very long time, and it'll eventually drop down, and it'll oscillate. It could hit 100 again, but it eventually will probably hit the 0 again. It just typically oscillates back and forth, typically from 0 all the way to 0 to all the way 100. That's kind of how you would almost expect that to go. Typically on the lower time frames than the higher time frames, that might be true. I'm trying to figure out if it's disingenuous to say that it's kind of expected that it can go all the way from 100 to from 0 to 100. Maybe it's not. Yeah. Okay. I think I might be doing a little bit I might be a little disingenuous to say that you should expect it to go from 0 to 100 and back, but you'll find that it kind of does, especially on the smaller time frame. You're not going to find good examples on the weeklies because there's just not enough time. But if you were to go to smaller time frames, you typically see them go, all the way. This one you can see is here. Let me. I have to turn the actual numbers on.
No, I'm looking at one of those myself, and I put it all the way down to the 1 hour. I don't see it being very reliable, or I mean, at least useful. It would probably be a better term.
See this one right here got from this one hit the 0.62. So that's basically down to the zero. Up here it got well into the hundreds. Down here it got 0.26. That's typically zero. Here 100. So you know what I mean? So like you can see how it goes, how it does it, but I guess that it maybe it's not so accurate that you could count on it every single time. But I know traders that will sit here and watch it and hit in zero, and they'll start to trade as soon as it gets to the as soon as there's a tick to the upside on a larger time frame, and that's when they'll buy in.
Yeah, I've been looking at just looking at it in the past. I guess it's kind of reliable on the uptick to start, but it doesn't seem like a very good way to find an exit point.
Okay, so the story that I tell is of a guy that was kind of a legend in one of the other discords, and we all watched it happen, so we all know it's true. He just traded on BTC's stochastic weekly RSI. So he would just buy when it's at zero, and when it got to 100, he would get on and said, "Okay, I'm out of crypto for a while," and he took off and fucked himself off for a while. And he made a shit ton of money in that short amount of time. And it was this period right here. It was already it had dipped, and we had it was this low right here. I think he bought into, and I think just in this period right here, he it was a I think a high leverage bet that he caught during like a FOMO almost even. And I think he sold. He sold, in November, and I remember him coming on the Discord and he said, "Okay, that's it. I'm done with crypto," and we haven't heard from him since. No joke, but we do know that he I think amassed tens of thousands of dollars in that little area, and he just determined that the price ranges between when you get from zero on the weekly or 100 on the weekly to zero, that the price ranges typically have been, in the I don't know, 50-70% range or something like that in most of these dips. He had them all mapped out from every single one that he's ever done. Found out, and was really pushing people on understanding this one principle, and he did really well with it. I don't think anybody else did really well with it because it's one of those things where it worked for him because it was his strategy. It built around his type of personality. It built around his technical skills. He was a computer coder, so he wrote this indicator specifically for his trading skills. He's the guy that wrote this indicator, by the way. So it worked with him. And again, like I said, I don't know anybody else that it really worked for because of those things. And that's why I say don't follow traders, even if you really understand their style, because I think everybody else tried to do the same thing and couldn't do it. You know what I mean?
Yeah. Well, I mean, that's what I'm saying. Like, I'm looking at it and I'm kind of going through the past and I'm trying to understand. But I mean, like, if it's at a zero, it seems like a great entry point. But I'm just not seeing a way to use the same metric to find a good exit point, even if it did hit the 100, because sometimes it continues to go up after that. It's just not as drastic, and sometimes it goes down, even though it stays up a little bit. You know what I mean? Yeah.
He was lucky because he caught this one right here. But let's see, if you caught this one right here and and thought that or this one, you would have made some money. But yeah, you'd have made some good money in this one right here. But yeah, I think that you'd need different actions. If he was waiting for this, you would have been wrecked because you hit a new low down here. Let's see how the monthly. Oh, we don't have a monthly on that one. I'd have to I forgot he didn't include the monthly on his indicator, but I can show you the monthly right here. Why isn't there a simple one? Hold on. There we go. That's the one.
Yeah, I found one. It's called STOCH Stoch space RSI.
This looks like it's the one that came with TradingView, or it's like the one that TradingView offers. Let's see. So it has a monthly. Let me just zoom in real quick. Look at where we're at on the monthly RSI for BTC. We might be approaching a peak if the monthly gets into the zero range. Let me. You can see these numbers represent where they are. So I sometimes when I'm looking at price like this spike right here, I'll often look at this number. I want to see how low price was on this or what the low was for that day. So I'll look at this right here for this wick right here. Hold on. And I'll see, the low for that day was 3,880. But I'll do the same thing for the RSI. That's these numbers right here. So down in here, you can see that we were in a pretty low RSI period right here. We've gone up and we're now in the 89 range, in the 90 range. I anticipate that we'll eventually get to 100. So I think that there is some strength left into this move. But we absolutely are closer to the high of this cycle, and we'll probably be retracing some point. And again, this is of the monthly. This stuff that happens right here. This is stuff that happens over years. In this area right here. So from top to bottom right here, this happened over the course of 2 years, 610 days, almost 2 years, 20 bars, 20 months. And this move that we're talking, the one from the bottom right here, that is 13 months. So this is just over a year of movement upwards. But it was enough to get us in the overbought area. We are overbought on it. If you were to see this on a monthly, and you see that you're on the overbought, I wouldn't buy this, because again, like as the term says, it's overbought. More people are buying than it's worth right now on the monthly, and that's a massive time frame. So if I were to advise someone who is talking about a long-term BTC, I would say that it might be a good idea to wait until this has dropped a little bit on the RSI. But again, on this is bullish. So we have kind of conflicting information right here. One thing that's worth noting too, and I mentioned this in the last one too, is when RSI does get into the real lows or the real highs, like for instance in these cases, RSI stayed down in the zeros and twos. Here's where it got to zero. Look at that, it got to zero right here. It zeroed out on. If you see these numbers right here.
Yeah.
So that was the absolute low right there. If I saw a zero on the RSI, there's two things that I would consider. One, and I'm going to put in a line here just so we can see it. That day that it zeroed out, right, or that month that it zeroed out. You can also see that this is where the gas was taken off, because that was the last month right there. You can see that it was the low month on price. You can see on this that it was the low month on RSI, even though it really never got into oversold territory right here. This was the low. And if you were to measure that to where it hit the let's see if it hit 100. Here's where it hit 100 right here. This day right here. So let's take this one and just kind of indicate. This is the day that it hit 100. If you were to take price from those 2 days, that's a 1,652% move in that price.
Well, okay.
So if you see RSI ever top out at 100 on a monthly, and again, this you could let's take this area, this month right here, and just kind of like draw it. Hold on. I'm gonna draw it on the chart real quick, just so I can see what it looks like on a smaller time frame. So you can see this is okay. So we'll do all of that month. That was February. I'm gonna go back to the monthly real quick because I grabbed a couple candles and I wanted to see how I did that. Okay, so it's the month of February. And we got 100 RSI. We had 100 RSI in March too. And that's when it started to dip, was in April. So let's take a look at that on the daily and see what that looked like on a smaller time frame. Okay, so the same thing. We'll look at how that looked on the daily. If you go down to the daily, and we've got, let me clean some of this up real quick. Okay, so there will probably be a time in here where we get close to 100 on these two. So let's see when that is. Yeah, if you could hit it on this day, that would have been nice. That's the closest it got to 100 on that. So the way that I might have traded this is the exit would have been when there's a cross, but you had a couple crosses. You had a slow cross here on the daily, and then it came up and it crossed again. So yeah, there really isn't a clear exit. If you're looking at an exit, you'd probably see when these crossed right here, saw that.
So then I'm not quite understanding what's the difference between the K and the D, the blue and the orange.
So here, let's one of them's going to be a faster average, and one of them's going to be a slower average. So let's take a look at how this particular one's set up. Hold on.
Because I mean, you're using the crossing as such a pivotal indicator.
Here, I'll ask ChatGPT for the best possible explanation.
No, you don't do that far. I was just wondering why you were using that as such a point.
Okay, so the K line shows the current price of the stock of the asset relative to its high and low prices over the in this case. So this is when I put this indicator on, and it had its default settings. So the RSA link is at 14 now. So over the course of 14 candles. Okay, so the K line is the price of the asset relative to its high and low prices over the 14 days. The D is a moving average of the K line, so it's used to smooth out the results and makes the trends easier to see. So the D line is more of a moving average of the K line.
That just means it's slower.
Yeah. So it's just slower. So it takes the same period and it kind of averages the K lines at, and so therefore it's just kind of like a standard average line of it, and so when it crosses it makes sense that would be kind of an indication of like a loss of strength. Now this is kind of a difficult one because if you're a trader and you see that it's just flatlining right here, and yeah, you do see these crosses, but it's not like a cross like this where there's a definite move downward. This you'd start to see some widening, and it might cause for concern. This you don't ever really get any widening in this area, so it might be one that it might be like a sit and watch, and then when you see something like this, it is an indicator because you see it's kind of sharp right here. Again, you don't see this until after the fact, so you won't see this movement until this day right here. And again, you're already maybe not this day, but you're seeing it like right here. So when you see that it's starting to move downward and it's no longer in overbought territory, it's moving towards the other one. You might use maybe the entry to the 80, because anything over 80 in according to this is overbought, and anything over looks like 20 is oversold. So you might want to use this as maybe your indication on a daily that once you start getting into the oversold territory, or once you start getting out of the overbought territory, that's a good time to exit. And in that case, you're doing it in this range. And if you were in on it when was it at zero in this area, when it was at right here when it was at zero, you did pretty good on that trade.
Yeah, I'm also messing around with that tool. I happen to have found one on BTC. I'm on the weekly, and it's at -1 at one point, and then it goes all the way up to 90. But when I measure the distance between those two, you would have actually lost like 2%.
Share your screen. Let me see.
Oh, that's on my other computer. Let me figure out how to do that.
Oh,
I can. Just give me a second.
Meanwhile, I'll check YouTube to see if there's any questions over there. I'm streaming on Twitch too, by the way. It's just so I have so what I do is I have my feed going constantly on Trading Studio and then on Twitch, and then because I don't want, the YouTube algorithm sucks for like just someone streaming their chart, because someone that it's one person will like check out every once in a while. So you can go to Trading Studio and see my chart pretty much all the time, and then I'm doing it on Twitch now too, and in the Discord I try and chart as much as possible. Okay, I see you're up now.
Sorry, can you hear me?
Yeah, I gotcha.
All right, I've shared my screen.
I'm watching.
Where did it go? Crap. All right, so right here, that's 9. I had it at a negative. It was weird. I think this will work. So right here it's at a 9, and then up here it goes up to 100. No, that's not the one. Gosh. I'm obviously terrible at this.
That's all right. Take your time. One thing you might want to do is double click on the right side of your where the prices are real quick, So go take your cursor up and double click right in on one of those prices, and it'll kind of justify your chart so that it automatically fits in that window, so you can see kind of all the price movement for that area, and it doesn't go off window.
Thank you.
You can do the same thing for the RSI too. That A right there that you're over, that does the same thing that double click does. It's just a shortcut for it.
Yeah, I keep turning that on and off.
One thing too, if you want, you can just do the window, share the window instead of the whole screen. If you don't want, like, I don't know, you could get. I don't want you to get doxxed. Oh, you're not on. You're not. I'm not broadcasting your screen. Never mind. That's typically the case because even in Discord, everybody's trying to stay anonymous, even on the Discord groups.
Oh, because I shared my whole screen.
Yeah, you got your screen shared instead of just the window.
Oh, well, I don't think it really matters because I can't find that spot anymore. It was weird. It was at like -1%, and then it went up to like 90, and then when I measured it.
So you might have seen it on a different time frame, maybe on the daily. So, but now while you're doing that, I'll explain one thing too, and this is something that irked me while this guy was trading and doing this, and a lot of people were watching him doing it and trying to copy, and they were getting wrecked, and I was doing my best to try and discourage people from doing that, because one thing to keep in mind is that the RSI is a lagging indicator. It means, in the way that when I hear lagging indicator, it means something different to me. I hear that by the time that you've seen it indicate on the indicator, it's probably too late. And now you can use that to your advantage on different time frames, because if you're too late on the minute, that doesn't mean that you're too late on the 5 minute, and you can kind of wait for the same type of scenario. Or on the 5 minute, that means if you're too late, you can find it on the 15 minute, or there's. And you kind of have to adjust your trade psychology, knowing that, okay, yeah, you're probably not going to be in and out of it quickly, but you might have to endure a little bit of a time in the red for a minute, or there's things that you kind of have to consider as you kind of try and synchronize those. But the reason why I like that multi-time frame RSI oscillator is because a part of finding a good time to enter a trade is finding when a lot of the lows are at, or a lot of the time frames are at lows at the same time, and that's what so he had built into that indicator. He had I'll show you. He had these little notifications, and that was when and he built this just for his type of trading, so I can tell that this was kind of smaller time frame. So if you were to go to a smaller time frame, you would find that there are multiple, like in this case, you have the 3 minute, you probably have the 5, or you have the 5 minute, you probably have the 15 and the 30 minute all high at the same time. And meanwhile, at this point, you've probably had you had all of those same indicators all kind of in the oversold area at the same time. So he knew that, and you can see, according to price, this indicator went off and it started really printing hard and heavy over the course of, well, this is minutes, so it's not going to be that long. But you can see that, from there, it absolutely did jump up in price. It jumped up on the 3 minute. It's not going to be much, but it's going to be, move this thing. Well, 0.5%, but for the 3 minute, that's not bad. But you can see how that happened on RSI and how these things printed to kind of try and guess when you have multiple time frames that are all overbought or oversold at the same time. You're going to see it a little bit. Let's see, like I said, in this case, yeah, that's definitely, I mean, and when you look at the candles, it looks significant. It only ends up being about 0.5%. But if you go up to a higher time frame, I'm going to close this one off. Actually, let me get rid of it. Like right here, you could see that it had a couple lows, it had a couple highs at the same time, but that wasn't a very good indicator. And so like I said, I think that by the time that a lot of this is played out, that it's already too late for the move on that time frame.
Well, I mean, by definition, using averages, the most recent numbers have the least weight to the average.
So a lot of these indicators, so there is a difference between a moving average and an exponential moving average. There's the EMA, and oftentimes I'll refer to them as the same thing just because, like I said, I'm not a moving average trader. But the EMAs and the WMAs have a little bit of a different algorithm to them. The EMAs have a little more. It's built into where more recent price average affects the average, the outcome of what's the price point or the average point. I'm trying to think of the best word for it because there's probably is a technical term, but the more recent price data will affect and it will be different than just the absolute average. This takes recent price into effect a little bit more. The weighted moving average does that similarly, and I wish I could tell you off the top of my head the difference between the two, but I can't. But they do both have something built into it to where recent price or recent volume has a little bit of an impact on where it prints.
Well, yeah, I mean, I remember math. The more weight you give the newer numbers, the less accurate it is, and the more the line moves volatile wise. So
Much better. Yeah, no, that's something you taught me something just now. Math has absolutely never been my strong subject. So
I've done a lot of sensor data with robots, so I know a lot about filtering.
Yeah. Feel free to bust that knowledge out any chance you get because that's your contribution for now.
Yeah, it just seems like all the names are different.
Yeah, so I mean, hopefully, it like in my lack of math knowledge does absolutely hinder me in trading because if I did have a better understanding, and I'm talking about institutional understanding of stuff like that, it would make a much it would make a big difference in how I understand and use these tools.
Yeah, because I mean, so far the RSI is the only one that I can actually say is familiar to me so far, which is why I kind of wanted to understand it better.
Good, yeah, and by the way, there's a lot of good resources on the internet that can explain it way better than me. Find YouTube videos that really get into the details, and there's probably somebody or a creator out there that might speak your language a little bit more. And as far as like that kind of trading and I'm more of a technical or engineering type of mindset. Off the top of my head, I know that there's a YouTuber called, I think it's David Tech, and he will take strategies and he will create Pine scripts for the strategies, and then he'll show you. I think what you would be really good at that I've never even attempted to do because it's beyond like my level of of technical expertise like that is being able to back test a theory or principle. I think if you can bring that skill to trading, I think that's probably something you will take advantage of. And I'm telling you, so Joel, the guy that created this indicator, that was his background. What was that kind of a very similar background to yours. So it wouldn't surprise me that you could see the math in something like this, or see the technical or engineering type of data, and really figure out a way to back test it and put something together to where you can take the and by the way, this is supposedly really easy to do. It's it's beyond me because it's just not the way my brain thinks.
Yeah, I'm really big on proof of concept. I like to come up with an idea and then go and test it before I put it into practice.
So I highly recommend taking a look at that David Tech guy, because he shows you how to understand not just understanding the how this data is formulated, but how to use it in trading. And then, like I said, I think just understanding how to back test a strategy will make you a successful trader, because if as long as you keep your emotion out of it, you could write a bot that'll do the exact strategy for you, so where you can take your monkey emotional brain out of it. You know what I mean?
Yeah, no, which, don't get me wrong, it's kind of the goal, for lack of a better term.
Yeah. So I mean, I think that would be a really good way to take that on. And I think that if I could have you in this Discord teaching how to do that, I think that that would be a very it'd be something I would very much like to learn from or learn about.
Oh yeah.
100%.
All right. So this isn't the exact one I was viewing earlier, but let me show you this one. So like
I'm
if
trying to follow you on mine too, so I can mess with it if I need to.
Oh, sorry.
No, go ahead. Just do. I'm watching you too.
So like if you were using the RSI and you really wanted to start it like as near zero, I consider a 0.92 a zero, right? That's close enough. And then I would look for the highs on it. But during the course of that trade, I would get very concerned. Again, and this is just if I was going that route. But I mean, in the end of the day, if I held out, I would technically make 8%, which I mean, it is not terrible. But if I put a stop loss on it, which I would have, probably, at around, 20% of whatever it is the initial in was, I probably would have been taken out of that trade and just lost on it.
Yeah, and okay, so zoom out and let's see what price does after this too. Yeah, zoom out and then move it so we can see future price. So yeah, I mean, I suppose that would have been go ahead, put those up there. So let's see what. And so there's different ways of the other thing to consider is there's different ways to enter this trade. Some traders, and I'd say it's probably the most common, is to you trade on them when the RSI lines cross, right? And then you trade out of them when the RSI lines cross, and that's it. Boom, boom, you're in and out. Now, and I shouldn't say that's it, because most traders also use other indicators to kind of back up their trades. So when like I said, I have kind of a list of mental boxes that need to be checked before I enter a trade. I should actually write them down, because I would probably be a better trader if I did. and actually physically check the boxes.
Well, I mean, like, here's a very good indicator of what you were just saying. If I came in on a trade right here, and then I waited until they crossed, which would be about here, that would have been a 14%, which is not bad.
Correct.
So I mean, I'm really liking the RSI. I need to really make sure I understand it proper. And then you were saying there's another one called the MSI.
Well, hold on. So there's a couple. There's another trade. So some people trade when the RSI enters. So like if it's oversold, if it's at the bottom. So you're at the, you're coming in and you hit the 20, right? So you're coming back up and you cross that 20. That's the place of entry. And then when you are in the oversold area and you cross into the 80, that's the place that you exit. So so go down a little bit, a couple, 3 or 4 candles, down a little bit more. So when you cross the 20, go to the 20 line, right there. So that's your entry right there, and then your exit is when you exit. No, you cross into it, go into it, or you're actually a better exit would be the cross probably, right there. But maybe the exit would be to exit when it crosses into or back out of the overbought territory. So go to the right a couple, right there. Yeah.
Okay. No, but yeah, so the RSI is actually making a lot more sense than the Fibonacci line to me.
What's that?
The golden ratio. Sorry. The RSI makes more sense. It's more measurable. It makes more sense in my mind than the golden ratio.
Yeah, no, I mean, and rightfully so. I mean, it's a very good trading signal. Let me show you. So we'll open up the standard RSI.
Is that not what this is?
This is the stochastic RSI. So there's another RSI, and what I do instead of using the standard RSI tool, I actually use it's called a divergence indicator. It's just basically the standard RSI, but it kind of automatically finds these places of divergence, so it makes a little job easier for you. And you can star any one of these. And it adds to your my favorites. So the one that I have, let me see, it's divergence indicator. Let me see which one I use. Mine is just called RSI divergence indicator, I think. So it's just a standard RSI, and it's that one that the other RSI is. The other RSI uses this as a part of its formula.
Okay.
So this is the average of price increases and decreases over the last handful of candles. Now zoom. Okay, you're on a daily, so zoom out kind of high. No, I mean I don't mean like that. I mean you can stay on the daily. I just wanted to see the candles like on a much kind of a. There you go. Now what the traders that I think are the ones that are the absolute they're the right the most often and they make the most money off of it are the guys that trade these divergences and RSI peaks. So it's basically finding these peaks in RSI and understanding where they are and in comparison to I think that that the traders that do this also have some kind of indicator that with the moving average that if it's above the 250 or if it's above one of the moving averages that it's always that you're looking for opportunities so you're looking for low points in the RSI to buy. So anytime that it gets in the oversold territory, you just put a buy in as it's going through. So you wait until the moving average is moving through the that kind of that 30 level in this case, and then when you see those divergences in particular, that's when you would either exit or enter.
All right. Okay. Yeah, so this is making more sense to me. Or I should say this leans more towards what I would do.
There you go. So like right, that one's should be a good one, and that's the one we're in right now. So it has been a good one. Now the problem with a move like that is just by definition the reason why there's divergence is because the RSI is stronger than price. So so that means that price hit a low at that point, lower than the previous, I guess in that case, drop or dip. But the RSI was stronger. And again, I showed you what that means as far as an impulse wave theory. It's because that third wave is stronger than that fifth wave down. So that typically means that pick one right there is where the bullish divergence is. Now it doesn't. Now the indicator is kind of, it messes up because it doesn't continue it. It actually continues to that next dip right there. You can see that if you were to trace a line from all of those three dips, they're decreasing in price every time. It's their new low every time, but in RSI it's stronger, and that's a very, very, very bullish signal. So it's like I said, I think that the most accurate traders trade based on that principle, where you're finding those divergences and finding a way to trade on. So like if I saw that, I think I would have saw that point on the RSI. I'm pointing to it with my finger right now, and you can't see that, where it dips below 30 right below you. As you know, that's a golden opportunity right there, because price is lower than it was at that peak, but the RSI is even stronger. Now, I bet you if you were to throw volume indicator onto that mix, you'd also find divergence in the volume too. It was getting weaker as it got lower, or stronger as it got lower. Volume's typically defaulted on there. So if on my screen, it's this little arrow right here under your indicators. Right here, hit that one.
Yeah, that
Do you have that? Maybe you don't have that.
No, I'm still on the
Okay, so yeah, you got to add volume to the. But I think volume I keep it turned off for the most part, because even though it's like probably one of the most important indicators you could use, it distracts my trading. It gets in the way of my candles, and it drives the shit out of me. Just the one right up top. Smokey, you see it, the very first one? That's the one right there.
Oh yeah, that's the first thing I did was I turned that off.
I know, right? It's a critical indicator, you know?
So it shows you if there's a higher or lower volume of whatever particular trade, sell or buy.
Yeah, you should in a really bullish or really bearish scenario, you should also see divergence in volume with price too. So a price will as price drops, volume goes up.
Oh, I gotta go.
Or is it weekends? No, I'm trying to remember. Anyway, That's trading 101, and it just goes to show I was never formally trained. Like volume.
Yeah. No, it's been great, and but I'm sorry, I actually have to go. So I'll see you next time.
You got it, man.
Later.
And I'm gonna be watching some Divergence and some RSI videos over the next few days for sure. Thank you very much.
Yeah, and we've got it seems like we got a decent amount of people in the Discord right now too. Hey, please chime in if you hear me fuck up, especially chime in and let me know what I did wrong, because I'm trying to remember the volume divergence. It's less volume and less volume with lower price. Let's see how that works. Hold on, because it would have been up here on the daily. Weakening volume. Okay, so yeah, here we have a big spike in volume. So weakening. So in this case, the bearish volume divergence was we had a big spike in volume on this wave right here. Price went higher, but volume was nowhere near what this is. So there was a big divergence as far as the price right here. From here to this peak is very different than here to this peak. So if it's a big broadening issue like that, then that's a weak sign. This is one of those that, I was a beginning trader when this happened. I looking back, there were so many signs that this was coming. We should have known. I should have known. What's up, triple bastard trades?
How you doing, brother?
Doing all right. So who the fuck are you? I don't recognize the new names.
It's MoCat.
Oh, MoCat, what's up, brother? Been a long time, man.
Yeah, I haven't heard from you in a while, man. I texted you, messaged you a few times, but glad to hear you.
Likewise. How have you been on the? We've kind of like very basically breached Elliott wave trading in here, but this has been kind of geared more towards like real fundamentals. But what have you been up to? How have you been? Have you been taking advantage of any of these awesome golden ratio setups, man? Or are you now onto a different strategy because you said fuck off, Elliott?
No, I'm still using Elliott Wave. I haven't been trading as much. I took a couple of weeks off. Just got moved into a new place, but I'm glad to hear you talking about this more. It's a good little refresher, and I don't really know much about the volume with Elliott Wave, so I just popped in here, so I'm just catching what you're saying. But yeah, I'm really digging it, man. I appreciate you sharing this knowledge.
Yeah, no problem. I was one of the I think the big Elliott wave conversation in the very beginning was the reason why the divergences on the RSI play out on the fifth wave of the Elliott wave. It's because the third wave is typically the impulse wave, and the fifth wave is typically the much weaker. Even though you might get new price on the RSI, it shows lower, and that's where that divergence comes in. So it's one of those things that the people that really don't believe in Elliott waves and don't understand that, you see how that lines up with every single piece of technical analysis that you hear from Elliott wave haters, for example. And it kind of confuses me that there's kind of a mindset of Elliott wave being a waste of time.
Yeah, I still don't know much about divergences and volume, so this has been. I hope I learned more from you about it, but I don't know. I just think once I've studied Elliott waves, all I see now are Elliott waves, and it definitely helps me see bottoms and tops, and these Fibonacci levels tied into it. They're great, they have these set of rules that they tend to stick to, and these norms that they tend to stick to. So yeah, like I've tried to stop, arguing with people about Elliott Wave. If they like it, cool. If they don't like it, cool. I feel like I've lost out on a lot of good trades just trying to show people how a trade works instead of doing the trades myself. So I'm kind of out of the trying to argue with people about it anymore.
Yeah, that's right. I forgot from what part of the country do you hail?
I'm in the Northeast. I live in PA now.
Oh, nice. Are you a hockey fan? I was always a Flyers fan.
No, I grew up in Massachusetts, but I always played basketball and football. You know, the Bruins weren't very good when I was younger, so I played a lot of basketball and football. So those are my main sports that I watched, and of course baseball. I watched a little bit of it, but now I feel like I don't have time to watch sports.
Yeah, you don't have that accent from either Pennsylvania or Boston.
Yeah, I was in Western Mass, so like Eastern Mass are the ones with the really obnoxious accent.
You live close enough to Qui-Gon to go hang out with him?
I'm not. Where's Qui Gon from? I don't know where he's from. Like I was around B before, but like he didn't want to meet up. I met up with Daryl. I don't know if you talked to him. He's in the other chat now.
Oh, that's cool.
He's a guy out of Ohio. I was working out there, so I met up with him.
Nice, man. No, I've met Finn. Finn's the only one I've ran into out here, but Southern California. So seems like there's a lot of SoCal people that that hang out in these areas.
That's pretty cool. If I'm ever in Southern California for work or just out there, I'll try to shoot you a message.
Hell yeah, do it. It'd be awesome, man. I don't think I've ever met an Elliott waiver in my entire life personally. How nerdy is that?
Yeah, same thing. If any of you guys are in South Florida,
I see that Turbo's in Florida. Are you gonna hook up with him?
yeah, when he gets down here, I'm supposed to meet up with him.
Oh, that's rad.
Is he driving down or is he flying?
He is driving down and flying back.
Damn, that's gonna be a nice little drive.
Yeah.
So anyway, Duffy, just wanted to, I think that I was kind of on some technical analysis rant and just kind of never ended up finishing it from there. But I wanted to see, if you had any other questions or requests, or if we wanted to do some TA or something like that. I mean, we could do TA all day. I mean, there's definitely always a lot of interest in people that know what they're. I mean, I shouldn't say no. There's always interest in hearing TA, technical analysis, in particular when someone has kind of a niche. In one of the other channels, this guy does technical analysis on a thing that he made up all on his own, and apparently enough, it works well enough for him to trade off of it. And I don't know if he's successful or not, but like he spends a lot of time doing technical analysis on that particular thing that he made up completely.
Okay.
Are we talking about Turbo?
We're talking about Turbo.
Fucking love that guy.
So let's do technical analysis on Ethereum. Let's do technical analysis on Ethereum. That's what I was doing. I was doing technical analysis on Sol in particular because I'm in Sol, and it's Astra. I'm in Astra too. I didn't take any profit on Astra. Let's take Astra. Hold on. See, I'm in these for the long haul. My entry is on these levels. So me being the Elliotician, right? The levels that are important to me in particular are the 1s and 2s. So I've got the 1 and 2 here, and I bought in at the bottom of this 2 right here. So for me, I have no interest in exiting this trade, even if it goes down 10 points in one day, because I don't think that it ever hits this ever again. I mean, there's the possibility that this does 5 waves up for me like this. Starting here, 1, 2, 3, 1, 2, 3, 4, 5. Right? Let's say it does that. Hold on, let me close these up real quick. Then we have more room. So it could do something like this for me, and then you're running the risk because this impulse is over, that a new impulse could take it down low. By the way, look at how awesome that is. That'd be an awesome trade if it did this, wouldn't it? But okay, so my point being is that from here it could be a new impulse wave down that could take it to a new low, 100%. But so my levels, one, in this impulse wave, I'm in a very safe place. I did put a stop loss right here because the rules for Elliott wave say that that the 4 should never transgress back below the 1 right here, and I'll put this here so we can see where the 1 ends in this scenario. Right there. So the rule says that it's not going to transverse back into this. So even though we're kind of getting close today, this is still in the grand scheme of things going to be one impulse. So I expect that it's just back testing, which it looks like it did. Again, this is the high right there. So it back tested this, and I mean, in the perfect Elliott wave world, this thing shouldn't really transverse into this, and it should be off to the races from here. If it does transverse into this, that just means that there's a new, that maybe this Elliott wave system right here. I'm not going to draw it. I'll just do it from here to here is 1, here to here is 2, and that might be the one that it's going to be drawing off of instead of this one, which makes this a 1 2 and a 1 2. Way too complicated. But these things often have multiple waves happening at the same time too. So that kind of complicates that. And that's where Elliott waves gets really complicated. And I want to make sure to kind of avoid making it too complicated. So I don't want to I don't want to talk about that just yet, because it'll confuse the shit out of you. There are some of those things that happen, like, trying to explain a diagonal to somebody who knows that the Elliott waves rules are that the 4 never transverses into the 1, but then during a diagonal it does. It's like, okay, you gotta have to like explain kind of the complexity, and even I myself am stumbled by the complexity of stuff like that. Okay, so anyway, we're doing a technical analysis, but I don't know why I brought Astro, just because I wanted to point out that that even during an 11% decrease, I'm still interested in this, because my entry is right at where the 3 starts. My stop loss, I should put a stop loss right here, because I'm banking on this being the 1 and the 2 and this being the 3. And if this does cross back into this, then it does affect my trade.
Does this KuCoin chart show it from like its inception, or is that just once it was listed on KuCoin?
So this has it from January of 22. But let me see because Binance typically has the longest. Let's see if Binance has a longer one. January. No, KuCoin has it for longer than Binance does. Do you know if it has a longer history than this? This is because I think I do. I typically go. So when I add these to my my watch lists, I typically try to find the one with the longest history, but it doesn't mean that I found it. Sometimes I'm lazy when I do it. Sometimes, there's so many that I just don't want to go through them all, or I'll check the popular ones or whatever. So you see, yeah, if there's a longer history, I'd love to know them. I'd prefer to use one of those charts. My concern with this one is that it's
coin?
This is Astar.
I don't even know the oldest chart for it.
The challenge, so with the Elliott wave people, is that this one is reversing right at the place where it should reverse if you were to expect a move down. But I wouldn't. I mean, I wouldn't know that would be confirmed until I saw it really significantly past this and kind of an invalidation point for that. And if that's an invalidation, then I still have a safe. I mean, it weakens the trade that I'm in because I am trading based on this being the 1-2 right here. And if this is the 1-2, then it should end up at 14 cents eventually. But if it transverses back into this, then I still feel like my entry is safe because it'll probably retest the bottom of this channel again, possibly right here into February. But considering I've never taken profit on this, I might want to take profit if it does go below this. I might half this this trade or something, and maybe buy into it again if it does hit the bottom of this channel, or maybe hits a Fibonacci level right here. You know, this actually kind of looks like a juicy place for it to land if we were to go like this. It could land on here in April, and this would be a good little buy. And you know, I would have made some money off of this. Take some of the profit from this, buy back in right here. Now this is only okay. So now I'm only using price action and Fibonacci's and Elliott waves. Now when Smokey was talking about how the RSI spoke his language a little bit more, I use the RSI to confirm this kind of stuff for me. But the RSI is already lagging, so for me, the reason why I use this is because it takes that lag out of it. This is based on immediate price action. It's based on immediate price action. And it takes account the price action based on just these different geometry that's real time. Does that make sense to where maybe there's an argument where somebody's an RSI trader versus like something like this?
Yeah, just so you know, Jewel, Smokey, Smoke Monkey and myself, we've worked on a lot of projects with parachute devices that automatically detect failures happening on drones, and so he's had to work with a lot of lagging sensor data and how to speed it up. So I think that's why it speaks to him.
That's awesome.
Right now.
Like I'm telling you that the people in this channel, the people that are here, right, they know Jolt and know and I've it's funny because I was never like a friend of his or anything like that, but I did watch his journey, and to be able to see how he did really, really well, really, really fast. It was that mindset that he brought to trading that made him that allowed him to do it.
Yeah, so like I think I'm more on the side of the Elliott wave, but if Smoke Monkey kind of shows me his model of how he's gonna do things with the RSI, I will definitely try, using both, and he will definitely be sharing that information with you guys as well.
So I would be really excited to see because that YouTube channel that I suggested to him, I think he'll get a kick out of. But that's not the only one. There's a lot more of that content creators like that out there that get really creative with the technical side of it, with the engineering side of it of these indicators and charting, and then of course that really does play well into the bot world, which is kind of I have very, very minimal experience with bots, but having the ability to think kind of on an engineering level like that is perfect for setting up bots and stuff like that. So I would encourage Smokey there to take in as much information about being so Pine scripting, bot creation, and really understanding kind of the fundamentals and the math of a lot of these functions. And I guarantee you that he'll be blowing us away in this channel, with kind of the stuff that he's coming up with, a lot more than the coaching I'm providing. You know what I mean?
Yeah.
And that would be my goal. My goal would be to help him achieve something like that. So anything I can do to help would be great.
Yeah. Definitely. Yeah, we've been talking about it. We appreciate what you're doing so far. Everything's been good. So
Yeah, thank you. No, I appreciate that too. I'm glad that we've stayed committed to this. We've done it, a handful of weeks now, and I think it's been very valuable. So I get a kick out of it. But I'll go into some of the other technical analysis too, because I want to dissuade you from only seeing my way of doing of trading. And again, I also use a lot of other indicators to kind of confirm these price action that I'm seeing too. So I like to go through a handful of kind of important things to look for while price action's happening, And again, everybody loves to hear technical analysis. On any Discord channel, if you want to offer technical analysis, you'll have the attention of the floor, because everybody has their own way of seeing the charts and measuring these things and finding entries. And everybody also realizes that everybody else is using something else. But since everybody kind of knows how the market works, and the market does react to all of these different types of trading, typically your style of trading will often cohere with other styles of trading, and so sometimes it's nice to just have that like convergence of strategies, just to find that, hey, their strategy also works with yours, and again, the times like an oscillator when all of those things align is typically going to be the times when the market probably will do what collectively a bunch of traders expect. The problem is when you have people that don't know what they're doing adding to the conversation, or there's a lot of people that they're so convinced that they want to be right so bad that influences and puts a bias on their their trading. You know what I mean?
yeah.
And that happens a lot. I'd say that it happens more often than not. That you get the personalities that just want to prove that they have they want to be right, and it's not as productive. But anyway, so the price action that I'm seeing, I'm concerned about that it's turned around both on where this channel is, which when I drew this channel, let's see, I've adjusted it, so I want to make sure that it stays true to the original. It's like this, so it's stayed within the channel. It's reversed on the 1-to-1 line, which means that this move from this point to this point is the same as from here to here as far as price wise. It's exactly the same. That's very common during a correction. A correction, again, meaning that the impulse move is downward, and we're correcting upwards to continue a move downward.
Yeah.
But the one thing and this is the challenging, this is where a lot of this trading kind of comes, into play, is I would expect to see some kind of a reaction off of this. There's a lot of traders that were waiting for this place right here to trade, and they are going to push it down. We haven't had the chance yet to test it and see if that is the move yet. We've had one candle where that's been the reaction, but that does not mean that's not going to continue. And that's where the other indicators come into play, because if we see that we're on the weekly and we're still moving upwards like this, that's a very good sign. This move right here, it hasn't hit 100 yet. It's still going up. The daily has hit 100, and it looks like it's kind of gone down. In fact, it's kind of gone up and gone down again. One thing that does happen often is this RSI line will react off of this RSI line. That happens. I hope that'd be nice. It's not uncommon for a candle to retrace its last candle. You see that happening often enough. To engulf it is a bearish sign. So if this candle were to completely engulf this candle, then I would say that was a bad sign. It probably would go up and then probably continue down again. But it typically takes a couple candles to be able to judge what happens after this. So for me to see an 11% drop in this, I'm not really concerned still. I'll wait until I see a stronger signal that this move is done and that maybe it'd be a good idea to take profit. And you know what? I might not get the best profit, but I'll get somewhere in a safe area, you know, before it drops down, hopefully. Or I might just take a risk and just say, you know what? This is a pretty good setup. You know, maybe there's, I mean, I don't know. I'd have to take other things into consideration. But this RSA, I don't think this is bullish. This gives me a little bit of concern. I will keep my eye on this to see what happens. And then same as the MACD, this little kind of movement right here. You know, that's a little bit of a concern, but really not, because that's just taking such a small amount of data into consideration. You know, we've got this position right here where this could create some kind of support. It's not unheard of for this to kind of move down into this, test it, and then bounce back. So I think that's kind of a interesting potential scenario. That happens certainly in areas like this. You know, you get this kind of support on it. My point in showing some of this also is that you can see that the support levels aren't exclusive to price. You know, you can all of this. A lot of TA is also completely is possible on other things. This is one of my favorite indicators, but I'm still kind of really learning how to appreciate the strength of this indicator. It is a volume indicator, but here, I forget what it's even called. OBV. Hold on. OBV. It's called the on-balance volume is what it does, and the way that it works is it's a momentum indicator, and it's not limited, so it can go as high or as low as it wants to. But these movements up and down are moving movements up and down. So when it goes up, it means that it's an indication that volume has moved in a positive direction. And when it goes down, it's an indicator that the average volume has decreased in a negative. It has moved in a negative direction, and it's been kind of a real strong indicator when it comes to, like, I'll show you Bitcoin and how it lines up. On a large time frame, so we'll do it on the weekly. You can see that it's extremely relative to or it moves very well in accordance with resistance and support levels, diagonal resistance and support levels. I could draw this line along this, you know, and use this as a resistance, and it's a very good indicator that this is bearish, you know, because we're talking about a long time frame, and we don't have bullish until it goes above and beyond that indicator again. And so it's a bullish move that it moved up, tested it, and moved out. And ever since that point, we've been bullish. You can see this is where it crossed right here. Does that make sense?
Yeah.
And you can even see in price how it's almost moved exactly with it right there. Yeah. And it retested it and moved forward. And this indicator kind of shows the same thing. So it moves really, really well with diagonal support and resistance. You can do the same thing here. I wouldn't consider anything. I would consider it extremely bearish if it dropped below this level. I would think that was a bad move, and that might not happen until price is in even a much higher place. So, but if it drops below this level and retests it, I'd say that we're probably in for a little bit of a bear market. And so when I'm doing when I'm entering a trade or I'm doing technical analysis, I'm taking a lot of these things into consideration. And to me, each one of these things is a checkbox that needs to be checked. Now, let me kind of like backpedal just a little bit. Since I trade on different things, I use this as confluence. But in the case of like Bitcoin on the weekly and using this indicator, this is my indication that, hey, okay, we're in a bullish phase, and if it goes below this, we're in a bearish phase. So for me, this changes my mindset on my trades, because if I get a move, if this moves back below this bar down here, and we're at a real high place, that might be my indication to think, okay, hold on, I gotta find a good exit from here on out,
Yeah.
Now another thing that's kind of crazy, but when price does when we're very bullish, when you're close to the top, you get these wicks down, and you can see it on all time frames. But when you're talking about these days, there was a day when we got to, actually it was on this one right here. This move right here in one day was insane. I'm trying to remember which one it was, but there was one move in here that was just, it was like price was fine, and then in one day you get let's see, you just get this insane dip, and price actually kind of came back up and caught itself, and it was even after like a 30% dip. But that's how quickly the price moves. And so that's why, when I was talking about how the safe bet for me in Solano was here, because this is a 1-2. According to my rules, the 4 will never transverse into the 1, and so therefore this is a safe place to use as a stop loss. And then and the goal is to continuously find safer and safer places, because price should continue to keep going up, even and never take me out. And once I find another 1-2, I'll like, say for instance, this one kind of comes down and makes a nice healthy 1-2. Then I might use the bottom of that one as the next stop loss. And the goal is to just continually up my stop loss. Maybe even add to my entry, when you get to another 1-2 like that. And then eventually, when price does get to, like what Bitcoin did up in here, there'll be, my stop loss here would have been at this point, and maybe I would have only lost, $1,000 instead of $14,000 during that day,
Yeah.
I didn't lose $14,000 that day, by the way. I did lose like $3,000 or something. That scared the shit out of me. I got so lucky. Because when I got into crypto, I knew nothing about it. It was all based on the amount of money that was being printed, and when that started getting printed, I bought on kind of early in let's see, it must have been right around this time right here, because it had a lot to do with the election, and I just got really lucky and just kind of traded my way to the top, and I mean, I couldn't do any wrong, but I learned a lot, because I lost a lot quick. I think that it takes you pay a tuition when you're learning.
Yep.
Oh, but anyway, back to some of the technical analysis. MACD. That has me concerned that it's in BTC that it's crossing right there on the daily. That's especially because hold on a second. Let's see how this is reacted here, because this is interesting because we've had the gas taken off. Oh yeah, that's why, because it was consolidating through this whole thing right here. The gas has been taking off. It's cooled off. It's gone into the negative territory. It's pumped up a little bit, gone into the negative. Let's see what RSI does. Weekly is at 98. Let's see if it's been in the 100. It has hit pretty close to 100 in here. Daily's on its way down. It's cooling off. It would be nice if the daily got down all the way to the bottom and it really didn't cool off that much, right? Or it didn't really lose much price right here. That would be a good sign that we could see a move upward. And that's what happens. So remember, you get these consolidation periods, and that on each time frame. And in this case, you can kind of see how that happened, because you've got the daily peaks right here. This is the daily peaking, and this is kind of that 3-wave, I guess. It cools off. And it cools off down to this level right here, so it's still relatively hot, even though an RSI like the stochastic dropped all the way down to 9, the price is kind of higher than it was even right in this area. It's right equal to it, so it's a good sign that the daily RSI has cooled down that much. And it really didn't affect price that much. It gives you a sign that the daily RSI could pump at any second, and it does. It gives it another little blast upwards. If it does the same thing here, where you get just a minimal little decrease right there, but meanwhile this thing shoots sharp down like this, it would be a good sign. I would think that would be something that would keep me believing that Bitcoin is going to make a new move up from this and really not hit a new lower low. And if that does happen, then I would expect that maybe right now this is consolidating. It's going sideways on the MACD levels. It's going sideways here, where you've seen little moves kind of below the median, above the median, below the median. It's definitely a sideways move right now for Bitcoin on the daily. I'm going to throw out the Bollinger Bands real quick, because Bollinger Bands should start to squeeze, and they're starting to come together a little bit. Bollinger Bands are we talked about this kind of briefly in I think a couple weeks ago, but Bollinger Bands typically price moves within these, because it creates that standard deviation from this median line, and so only 2% of price action is going to move outside of these lines. But what that does is it creates these bubbles that the Bollinger Bands move in and out of, and they call it squeezing. So when you see price go from a place where you've got like a big bubble and then it kind of comes in and starts to squeeze, that's when that consolidation happens, and that's typically when you want to pay attention to these lines and see how price reacts off of it. And in this case, I'd be doing, like down here in the past, I'd be doing, kind of this to see where we get a bounce off the 50 right here. In this case, we get that bounce off of the 50 right there. You see how it's reacting to the moving averages. The moving averages, here, let's turn off the Bollinger Bands for a minute. You get this cross in the moving average right here. Typically, the move is to move through it. Oh, here, and that's what it does right here. It moves through and retests off of it and bounces up, and that's where the moving average traders would have traded right in here. Not a bad trade at all. But back to the Bollinger Bands, and I'll close the moving averages but that's confluence as well. When you see the moving averages cross like that. This is also just another one of those check boxes that gets checked right there when I'm trading. So this is a good bullish sign. You get widening right here.
Yeah.
I had to clear my throat. Sorry. You get widening right here. And what I might expect to happen is maybe these will converge a little bit up here because we've had a significant price increase that this average hasn't really taken much of this into consideration yet. But I would expect that because of this price, it'll probably move up a little bit. These might converge a little bit, and price will kind of converge around it. But if it hits it, there's a good chance it'll use one of these moving averages as support, and you'll have kind of indications in the RSI again that'll maybe this will be that's when this will happen where that goes into oversold, or in your RSI you might get this might show in oversold area at that point when it does that, and those will be kind of indications that on the daily this thing's about ready to move up again because we just didn't lose a whole lot of steam in this last cooling down period. So anyway, that's some TA, and that's probably more TA than most people give. Most people will, when they give technical analysis, they might just do kind of some recent pivots and Bitcoin. They'll like some people will come on and they'll say, okay, if you're looking Bitcoin, the macro, we're still pumping. Things look good. Prices increasing. We haven't had any new lows. So as far as that's concerned, we have we might be at the top of the cycle here. On the daily, I'm trying to think of what somebody else might say on TA. RSI on the stochastic is maxed out on the dailies, but the MACD looks to be widening and still kind of has momentum building, still showing dark. So on the long-term weekly, Bitcoin looks good. Short-term, Bitcoin is in a little bit of a downward trend. It peaked, looks like it might be in a correction, but it's going sideways, ranging in the area from 35.8 to 38 on the 15 minute. It's been doing that since it broke the high on November 8th. Does that make sense? And a lot of people will pay real close attention. They'll be looking on their charts for the same type of information, and they'll be kind of pointing out the same things. And maybe it'll inspire someone to take notice of a pivot or something like that somebody didn't see before.
Right on.
Am I wrong, MoCat? Matches?
You're not wrong.
Maybe a structure break. That's about it.
Yeah, and that's kind of neat. When the group in some of the discords and stuff is oftentimes someone will say, "Hey, yeah, you forgot to mention this in that whole thing," or "I just wanted to point out that in that same scenario, some confluence there is that you've got that structure break that happens, earlier on, and I think that's a good sign that particular move is over and we've got a downward trend." But anyway, I think 2 hours is is it 10? We did 3 hours today, dude. We're in this for 3 hours right now. Jesus Christ, I need to get a life.
XRP is pumping right now.
Oh, see that's a FOMO one because I had XRP for a while and I prematurely exited that one, but I did very well on it. But yeah, we've been going for more than 3 hours. Okay, so are there any questions? I think it's a good place to end it. 3 hours is thick. I must be so thorough, or either that or I put you to sleep if that's the case. So yeah, all right. Well then, I'll end the YouTube feed. You can always see my my feeds live. Well, not always. Sometimes I do turn them off. But if you go to Trading Studio, tradingstud.io, it's always there. And Twitch doesn't have a way to just turn it off like YouTube does. You know, I don't want to keep my stream live on YouTube. You know, just streaming my chart because I think that will fuck up my algorithm pretty bad. So. But anyway, so this is the end for YouTube, but the rest of it is still live, and that includes, you know, maybe some audio. Sometimes I guess yeah, I should put some audio to it. That'd be fun. I probably do need to get rights for audio, but anyway. But yeah, I will. I'll see you guys on Wednesday, huh?